Everybody's giving their spy prediction. Now make Nancy. I forgot about that, Nancy. $6.50 by Monday. Well, we got 666 here. That's the number that we want to hold today. Do you understand? Well, I want to see if we can get it. Just there it is. My favorite number, 666, is the number we want to hold today. Let's see if we can hold 666 and have a good Friday. I've been waiting for that to come up. Six, six, six. Verify you are human. This may take a few seconds. I hope I didn't get banned from Disney yesterday. I mean, from Twitter. It's verifying that I'm human sucks. How dare you? Why do they say that? I mean, that makes no sense. Verify if I'm a human. What are you, a robot? I'm programmed here to receive. Six, 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 six. I want 666 to hold. I want 666 to hold. I want 666 to hold. 666 in the morning. 66 666 66 666. Six 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 six. Six to Maloo, my darling. Russia spy ship detected just miles from Hawaiian. Oh, coastline. Prompts U.S. Coast Guard response. Whoa, Russia. I don't think you want to do that. No, we don't. Biden's not in there no more. It's Trump. Russians might nuke us. Expedia, find your ideal flight to Cabal San Lucas. I think that's where I'm going to take my next vacation. I more or less about made my mind up on it. I'd like to go to Jamaica, but I'm going to wait until they clean it up a little bit. Devastating. Oh boy. Let's see if I can get dialed in today. Jim, you need to take off your shoes and put on your slippers. Yeah, I do. Expedia, find your flight to Cebu, San Lucas. Starts November 20th, Black Friday deals. Oh yeah, maybe that's the time when I should go ahead and get my vacation. Springfield, Murray, continue your search. I wonder if I can find me a December. So we got Friday, and we'll have this will be Thursday to Sunday. View place to stay. No, not the 11th, you damn you. To the 4th. Corrector has what? Please correct the error. Oh. Cabo San Lucas. Sam I am. Today's the 14th. $670s would be nice to get today on the SPY. We'll see where them are priced out at. I'm going to think right around $2. $670s. Yeah. November 14th, the 670 calls. Damn, they're expensive for the first. I might have to. I ain't going no way. I ain't paying that kind of price. God. I don't think I've ever had quite the buzz like I have here lately on this matcha. Might have to quit drinking it. My darling. YouTube's on. Here we go. Dang, it happened fast. 104 to 670s. Just about where I want them. Oh, my darling, I'm so sorry. The 670s. We got to break the 200. Could get a double bottom at 664. Looks to me like that'd be the shoulder line. Okay, get ready. $0.86. There it is, right there. There's the other shoulder line. The 670s. At 84 cents. Double bottom. $72. Stanley raised NVIDIA's price target ahead of earnings. Wells Fargo, Morgan Stanley. Earnings are next Thursday, I take it. Well, 600's a major support level. Just speaking of numbers. I'm going to set a tight stop when I get in this trade. I'm thinking right now, really. I think it should go for it, Jimmy. At my risk. $0.72. fast scalp. We got a 1, 2, 3, 4. Whoa! 88. I didn't even get enough chance to put my trend line in. Now my problem, there's 96. Whoa. Whoa. Get ready. Woo! From Washboardjim, I'm the founder of the Sneaky Snake Trading Strategy, where I got out at 106. Randy? What do you got to think about that? Huh? Is anybody impressed? We're at the 200. This could be a good day today, I'm telling you. From Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Do. It's a good way to start the day. We hit the 200. We have to break. How we love the sneaky snake. Do. We're now at the 200 EMA. I'm going to get rid of all of them here. 200 EMA. $117. The 200 SMA. They're now at 120. Woo! All out until I get back in. Whoop, 120. Now I need to go in the bathroom and scratch my balls. They're kind of itching this morning. Does anybody see the tweezer bottom? Someone say yes. Someone say yes. Yes. Okay. And I did that with my shoes on. Good morning, YouTubers. So the SPX, probably 6713. First we got to break the VWAP on the /ES. And that's at a yin-yang. So I got two confirmations to hit the VWAP on the /ES. Okay. Well, the calls are expensive this morning on the SPX. 6750s. We hit the 21, and we can hit the VWAP on the /ES. So if that breaks, we might end up at 6710. At 510, I got them at 450. We're at the VWAP, so I have a little concern here. I'm gonna go get some WD-40 today, or this weekend. Hopefully I get this chair fixed this weekend. $63. $450 to $620 right now, $610. I'm dialed in today. No. We're at the 9 right now. Got to hold the 9, or I'm going to jump out of it. Or buy another one on the dip. But fudge. Yesterday I was not dialed in. We're back to the VWAP. $6.30. Could we get $1,000 out of these today, Randy? $67.08 now. I'm using the 63. I'm up $200. Have you ever thought about selling? Not until it hits the 63 EMA. Or comes close to it. Because then it could break it. Today I'll be accepting no phone calls from grandmas. I got one trying to set me up. Here we go to 700. It's kind of slowing down a little bit, thinking about it. Fuck. Last night was a long night. This is your 9 EMA, YouTubers. As long as we stay above, if you like to set stops, we got the 9 EMA and then we got a double bottom. As long as you're above the 9, you're bullish. But when you start getting a little bit below it, then you need to, think, okay, should I set my double stop right below the double bottom? Or should I go ahead and set it just right below the 9 and try to get as much as I want out of the trade? And see, like, you can only trade for a few minutes every morning at open. We could, if we break to 63, we could end up here at the 200 by the end of the day. Now, we've had some pretty good sell-offs, and we opened down this morning. I've already made almost $400 this morning on the SPY, so I'm not. I'm kind of on my toes wanting to get out of this trade, but we have an ascending triangle right here, which is bullish. And I'm going to show you how I'm going to draw this ascending triangle out. That means I think we can get 700 and something. So we've got these wicks, and we got all these bodies right here. So I'm going to take my support line, or resistance line, to break right on that body there. It's sticking up. As long as I'm connecting with these wicks, those are confirmations. And then you take the body right there and run it up to that next body. And you can see we squeezed. So, and we're getting close to that 63, so that's like a resistance level. But the pattern's bullish, but, you know, scalping is a little bit different game. There's almost 700 right there. $7. See, I'd be happy with that. $250 on a $450 trade. Do you understand? Now we're getting a little top wick heavy here. Hello, I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Patience is the companion of wisdom. Do you understand? We're at a resistance level. This is called an ascending triangle. Now I jumped in this trade at 450, the 67.50 strike. And I'm going to prepare to sell this because we run up here and we've hit the 50 SMA and the 63 EMA. Now I do think later we can go ahead and jump up and hit this 200 EMA and SMA. But as long as we stay above the 9, we're bullish. So if you set stops, you probably want to go ahead and wait for the 21. Now we've had a crossover with a 9 over the 21 that makes it bullish. So I'd set my stop, and then we got a double bottom right here. And I'd set the stop just right below it, unless you already got out of the trade at $6.50. And then you could always buy it back in if you want. And if we hold the double bottom. And today's Friday, and we've had a pretty good sell-off, and I think we're just going to kind of consolidate today, and then maybe have a breakout up to the 200 on the 1 minute time frame. So this is the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And always remember, patience is the companion of wisdom. Have a great day. So now it's almost time to get back into the trade here. If we hold this 21, so once I hit the 50, I went ahead and got out of it at 650. Thank you, Rob. We're squeezing again. Now we're down to 410. We came back up and retested the 63. Oh, no we didn't. What am I doing here? So we got a TTM squeeze going on with these red dots. We're still at, it's called a pivot point area. And it needs to hold the 9 or the 50 SMA. And we got a triple bottom right here. So it's important that we hold this support level. If we don't, we'll probably drop on down. It's major support. It has to hold. And we got the VWAP over here breaking down, but we have the 63 holding it up. So as long as we hold that 63 on the slash ES, and we got a double bottom right here, triple bottom, close to it. I'm going to count it as one with that wick. Do you understand? Now I'm out of the trade. People are taking profit. I don't think people are jumping in. They're jumping in to take a bigger profit while it's there, not to let the smaller profit. Now what? You're starting to sound like Kamala. Did you take that personal? Woo! Now that's got to crack a smile on your face. I'm sorry. I didn't mean to hurt your feelings. Magnificent. I'll get you back, he says. Don't worry about it, Jimmy. I'm going to get you back. Woo! We're back above the VWAP. Where I talk about chart patterns, moving averages, and being in the now. Here, get out of there. $4 to $6.40, just like that. Six, 7, 2, 6, here we come. Oh, yeah. Man, look at SPY. So we're getting ready to squeeze again. It's 9:20, and it'll be my lunchtime real soon. So I'm debating if I want to go long in this trade, or it's been kind of a drama week, and I think we're just going to kind of relax today. It's not going to be as bad as the last ones. And we have a resistance level up here at the 200 EMA. If you're still in the trade. This is where I got out here at 650. And I was going to get back in, but I was doing that video, and it got down to $4, 420. I should have jumped in it. Because I think we're going to hit the 200s. But if we get a big fat knife, I'm going to be ready to jump back in it. Right now we're bullish because we're above the 63 on the 1 minute. And that 67.89 is going to be my pivot point for today. Because that's where that ascending triangle breakout was. I wonder if I can cut that right off and see where that goes. Oh. So we'll redo this. I'm going to redo it. It's right there. And then cancel. Cancel right extension. Boom! And move this over here. And remove. Here we go. Hello, this is Washboardjim with a sneaky snake trading strategy.
Hi, my name's Laura. Is that a megaphone pattern that you see on that SPX? A megaphone? And I say, I'll draw it out for you, Uncle Zimmy. By the way, my grandma, she's pregnant.
Your grandma? That is a megaphone. Do you know how to count to 4, Laura? 1 2 bits, 3 bits, 4 bits. And we didn't break out on the 4, so we pulled back to the pivot point. If you think we're still bullish, you jump in the thing right here. But I'm going to wait down here for the bottom of the megaphone. Just in case. Because I'm happy with what I made already. And I'm getting ready to go to lunch, and I don't want to be stuck in a trade. But you're definitely at the 21 right here, and these are now at $5.30. $5.10. But if we get down to the bottom of the megaphone, we've had two different patterns here. We've got the ascending triangle support, which we're at right now, and that's what I called on the pullback. And I made that a pivot point. This is where we called out the breakout. So that becomes a solid support. And if that doesn't hold, or if you jump in the trade here at 510, and it jumps on down here to the bottom of that megaphone, that's where I would add, unless you set a stop right at the 50, and then wait for the megaphone. I'm going to wait for the bottom of the megaphone. I'm not saying it's the right move, I'm just suggesting patience is the companion of winning. The sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. We're at the VWAP over here on the /ES.
Jim, ever since I started using that VWAP on the /ES, my trades have almost doubled in profit. And it gives me a better opportunity to take the trade.
Right now you're at the 63, baby. Randy says 3 black crows and a tweezer bottom boom. There it is. He called it. 3 black crows with a tweezer bottom. Where'd you pick that up, Randy? Woo! There it is, number 5. Now where are we going to go? That's what I thought. That's exactly what I thought. Good call. $5 to $8, just like that, brother. We're going to call this trade next trade here. I'm going to show you what it is. YouTubers, buckle up. $5 to 8. Now you got a tweezer top with 3 white soldiers. So I'm going to show you a trade right here. Randy picked it up real fast. Right here you got 3 black crows. Want them, 2 bits, and a freebie. You got a tweezer bottom for the entry. You have 3 white soldiers out of the trade with a tweezer top. 3 black crows, tweezer bottom, 3 white soldiers out of the trade. And it can run up here to the 200. But I want to eat. I got food on my mind. I've been up since 1:30. And I'll show you what I snacked on this morning. It'll be our infomercial for today. So this is the SPX calls Lotto from $5. Strike, same strike I've been trading, 67.50s. Now this is called the 3 black crows to 3 white soldiers. Three black crows, tweezer, bottom. Then I'm going to type in 2, 3, white, SOLDIER, soldiers, with a tweezer top. And right there is $350 within 3 and a few seconds. My name is Washboardjim. I talk about chart patterns, moving averages, and being in the now. So first we're going to put in the 3 black crows. And I'm using the TTM chart. And then you got the 3 black crows right here. 3 white soldiers. What color should I go with that green? I'm going to use a can't use a red. So I guess yellow would be the one. Perfect. Good eye, Randy. Give Randy an A plus. Rob. There it is, getting close. So we bounced off the 9. If you're still in the trade. $9. Boom! There it is. I hit my destination. So what's going to happen now? Can anybody guess? I found a four-leaf clover, this luck to me.
No rabbit spoke, no lucky star, no magic
Wishing tree, but I got lucky. Yes, I got lucky.
when I treated you. Ooh,
Got no
rainbow round my shoulder, no horseshoe on my door. Like that blues will hold me tight. Look out for more, I got lucky. I got lucky when I treated you. All this running around, all my fingers crossed. Just my good lust to tell you that you love me. Whoops and make my day. Well, I know that my good luck is really here to stay. I got lucky, I got lucky when I treated you.
always
Running around with all my fingers crossed. Fate of love I found, just my good lust. Tell me that you love me, whoops and make me day. You don't know that my good luck is really here to stay. I got lucky, I got lucky when I treated you.
I got lucky.
I got lucky when I treated you. Boom, baby. Thank you very much.
Get this.
Randy gave away $2,000. Now he's pissed. Is it my fault? Am I guilty? Say yes or no. If you say yes, you're kicked out. Look at that sucker. What a beautiful call at the bottom. Tweezer bottom.
About context today, right? Because you're still going to see a lot of red on the screen, but it's substantially less than it was just an hour ago. So, watch as this day develops and watch as things go from red to green. That's going to be your indication. So you start to see that in the performance of the percentage of names that were higher, and you start to see it happen within the sectors. So right now, only energy, utilities, and IT are higher, but you have industrials about to turn green. You have real estate on the verge of turning green. So today's about pairing losses, and if you can, getting over that unchanged line.
Okay, good sector breakdown for us, Alex Coffey, and a good look at the Max 7 as well. Thank you so much, as always. Appreciate your time. Let's widen our scope now and take a look at global markets. The session was not pretty out in Asia overnight. Stocks mostly selling off, tracking the tech wreck we saw on Wall Street yesterday and amid these reduced rate cut bets now. The South Korean coffee feeling the brunt of it, falling 3.8%. Tech giant Samsung down more than 3%. Nvidia memory supplier SK Hynix sinking below 6%. Over in Japan, the Nikkei losing 1.8%. SoftBank tanking 9%, extending losses after selling its stake in Nvidia, which it revealed earlier this week. Not helping things in the Asian session, downbeat China data. Economic activity indicators slowing across the board, raising concerns about whether the momentum there is fading. On total retail sales, which is a key barometer of the health of the Chinese consumer, softening from September despite the national holiday. Industrial output consistent with what we saw in exports, which contracted, remember, growing at the slowest pace in over a year as factories closed for Golden Week. Fixed asset investment, a bigger worry, slumping to the lowest level since 2020 during the onset of COVID-19. As property investment continued to drag in double digits, fresh housing data also pointed to continued downward pressure in the economy, new home prices falling the most since October last year. So, where does this leave stimulus in the world's second biggest economy? The thinking here is that there's not a lot of urgency right now, with China is on track to meet its 5% GDP target thanks to a strong start to the year and front-loading of those exports, but fiscal policy is expected to be more supportive moving into early.
Jimmy's right about the market.
Coming up, it's time for Inside Out. We'll take a closer look at Alibaba, speaking of China, and other Chinese retail names ahead, and bring you an example trade when morning trade line comes back.
1190.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your
We're about to hit my resistance.
Right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Welcome to Schwab Network, where real-time market coverage means expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
We're definitely in resistance levels now.
You're making a play or risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
We are back on Morning Trade Live. We've got a good look at the state of China e-commerce this week, with JD.com and Tencent reporting earnings yesterday, Baba reporting early next week. Crank shares China Internet ETF is up more than 30% this year and hit a 3-year high on October 2nd. So let's go inside out on China stocks ahead of Baba earnings. Joining us now is Brendan Ahern, Chief Investment Officer at Crane Shares. Thanks so much for your time, Brendan. So nice to speak to you as always. Happy Friday. So, just before we came to you, I painted a pretty grim backdrop of the sort of macro picture right now off the back of the data we got last night. Crane Shares up this morning, Alibaba up this morning. Why are investors not too worried about the state of the Chinese economy right now?
Because we don't live in China.
It's great to reconnect, Sam. Good to see you here in the U.S.
What kind of question is that?
I think the data, the economic data in China's been
China's communist.
Not too bad. It's kind of a mediocre at best, but at the same time, you still see from the company some great earnings growth, and I think that's what the financial results from Tencent, JD, as well as Bilibili yesterday, Tencent Music Entertainment earlier this week. Actual companies geared to China's economy are actually doing all right. I think overnight we had this real kind of U.S. AI valuation-induced sell-off. Really, growth stocks globally were just kind of hammered, particularly the semiconductor stock in Japan. But so I think it's a little bit of big picture. China's doing okay, but some of the companies geared to China's economy are finding opportunities.
Yeah, they certainly are. And I mean, as you say, Tencent, Jingdong, JD.com, not looking too bad. Even if there was a little bit of margin pressure there, it does look like the investments like JD is making into perhaps some of the food delivery wars is paying off for them. Tencent is now getting into this 3D imaging sort of new world frontier of artificial intelligence. I don't even think we've got past this frontier to get to the next one, but I'll leave that there. But taking on the likes of XAI and what Google's been doing is certainly interesting. Let's talk about Baba though, because we're going to hear from this one next, and this has been a big one because it's up like 90% year to date. It's really been a favourite this year, particularly as a sort of more inexpensive way to play the whole AI theme. Talk us through what you're watching as far as the metrics, because to my understanding, it's really been the core business. It's been getting back to what it's good at, e-commerce, and also when it comes to the cloud, as far as those revenues, they've been holding up. But what are you going to be watching?
Yeah, the core e-commerce business has been challenged because of very light domestic consumption in China. I think there's going to be increased policy support. We've got the draft of the 15 5-year plan, which really emphasizes raising domestic consumption. At the same time, the actual e-commerce numbers have been pretty light, and that's why you see kind of top-line growth is pretty lackluster. Just, analysts are expecting only 5% revenue growth year over year. At the same time, in the previous quarter, you had more than 20% growth in cloud. So I think investors are going to be very focused on the cloud computing. Can that pick up some of the slack based on the tepid top-line growth due to the core China e-commerce business?
Okay. I'm just wondering, as we look at, what people do see as more of an inexpensive way to play the whole AI theme with sort of your Alibabas of the world. I do want to just switch gear to F-Pung, and I know we are supposed to be talking about a lot of the retail and e-commerce players, but I do want to pick up on what we've seen this week with this kind of view that it's going full Tesla right now with this sort of validation of, robotics, humanoids, etc. I'm just wondering what you're seeing as far as that company, as to how much credence we should give to this story as maybe another sort of cheaper way to play the whole AI trade, and particularly off the back of what Tesla's been doing.
Yeah, definitely. I think Crane Shares is known because of K-Web, and I think Alibaba's IPO really helped put K-Web on the map. At the same time, I think Unitree is going to put our KOI ETF. So we launched a global humanoid robotics ETF called KOI. And I think this Unitree, the largest robotics company, they're making 200 robots a day in China today. Unitree, they're going to go public very likely in December in Hong Kong.
China's building an army.
But yeah, XPeng, very similar. I think the automotive companies, as well as a lot of the OEMs globally, don't realize that they're actually going to become a robotics company. And Elon Musk has spoken to that there's actually talk of is Tesla even going to be making cars in 5 years? Is it solely going to be producing Optimus? XPeng, the big Chinese EV automaker, very similar visionary CEO, founder.
Yes, he'll still be making cars, you idiot.
Into a humanoid robotics company, and there's a whole host of players that we think are going to be beneficiaries of this trend. And it really is driven by AI. It's kind of interesting to me, Sam, that as much as people talk about AI, they're not talking. It's not connected to humanoid robotics, but that's something that's coming, and I think you'll see those dots connected in the not too distant future.
Yeah, I mean, Coy is a good friend of our network here at Schwab. I mean, he was here with me on set, so, we go way back, and we always welcome Coy onto the set as well. Brendan Ahern, always a pleasure. Thank you so much for joining me here today. Happy Friday. Have a great weekend. Chief Investment Officer over at Crane Shares. Let's trade it now with Tom White, host of Fast Market. So we mentioned Alibaba out with earnings in coming weeks. What's your example trading approach for this name?
Well, it's had a good run. A lot of the Chinese stocks have. Appaloosa just came out. It's their top holding. David Tepper's Appaloosa and some other hedge funds have been buyers since the start of the year. So that's lifted up this space. Stock's up 87, 88% so far this year. It's pulled back about 16, 17% from those recent 4-year highs that we saw last month, but still a lot of momentum to the upside. They have earnings on the 25th, so that's going to be maybe a potential catalyst, but also higher implied volatility in that November 28th weekly option series. So that's the one I looked at. Going on about 14 days till expiration, you're going to capture that earnings event, so implied volatility levels are higher. So I looked at a neutral to bullish short put vertical that takes advantage of upside exposure, but then if the stock doesn't do anything, or maybe even the stock pulls back, I can still profit on this type of strategy. So in that November 28th weekly options, sell 150 strike put on the money to the downside by about 10, 11 bucks. And then buy the 140 strike put, so a short $10 wide neutral to bullish put vertical. Collected roughly, I've got 225 credit on here. That's where it was trading before the market reversed, and now we're higher. So probably trading about $1.70 right now. But the credit you collect is what you can make on this particular trade. So if you collect 225 bucks with $775 in risk. A little bit more risk versus reward if you collect only $1.70. But that break even on this one, 147.75 over the next 2 weeks, that's about 8% below the current share price in there. So you got that big cushion to the downside. The probability of that short 150 strike being out of the money at expiration, which is what you want the stock to remain above 150. That's about 70% probability. So probabilities in your favor, higher implied volatilities due to earnings. You just need the stock to remain above, basically about that 148 level.
Up 1% today, up 90% year to date. For Baba, going to be reporting earnings at November 25th, that is Tuesday before the US Open. Thank you so much for joining us on that, Tom White, as always. And we are looking at a bit of a dip buying situation here for the markets this morning. We've actually seen stocks turning into the green in some sectors. Thanks for joining us here on Morning Trade Live. I'm Sam Barnes. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Trading 360 with Marley Hayden is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Man, these calls, it went from 12 something there to 15 just like that.
Good morning. We're 90 minutes into the trading. And welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. Here's what's in store for you on today's show. In our 360 Spotlight, we'll take a look at the state of the economy and the consumer as we head into the all-important holiday shopping season. And lack of economic data could impact the Fed's rate decision next month. Then for our disruptor today, we'll talk about Apple after
You're my disruptor.
iPhone rose 20% in China. George Tillis will join us to break down more and also give us an example trade. And then in our 360 round, we're going to talk applied materials. Shares under pressure following their earnings in what seemed to be a strong report and upbeat guidance. We'll get the details later in the show. But first, let's check in with the markets. We are seeing a bit of a reversal this morning. The S&P now trading above the unchanged line at 67.40. The NASDAQ trading about 0.25% higher at 25,053. The Dow still under pressure this morning, down 0.6% at 47,157, and the Russell 2000 trading up 0.1% right now at 2385.67. Checking in with the 10-year and some of the moves that we're seeing in cryptocurrency and gold here. Let's see how they're shaping up today. The 10-year higher up 0.25% at 412 right now. The dollar trading higher as well, 99.22. Gold is down almost 2.5% at 4,094. Crude oil up more than 2.5% above the $60 a barrel mark, 60.23 right now. And Bitcoin under some major pressure, still down 1.25%, trading at 96,895. Those are levels as low as we haven't seen since the summertime for Bitcoin, below that 100,000 threshold. I do want to bring in our first guest, though, of course, Alex Coffey, co-host of Next Gen Investing, and our senior equities contributor here on Schwab Network, to talk about some big news coming across this morning that Walmart CEO Doug McMillon is unexpectedly retiring.
Yes, and this marks the end of an era, a well-beloved CEO by investors. As you mentioned, Walmart Chief Executive Doug McMillon set to retire in February. He'll be replaced by U.S. head John Furner, who's long been seen as the heir apparent. More than timing, I think, was a surprise here. It did send Walmart shares lower, but they since rallied about 2% off those lows alongside the overall market.
Walmart!
Down about 1.5% here in real time. John Furner takes over Walmart in a really, really critical time. Questions about the trajectory of the economy for one, but really this transition into a world augmented by artificial intelligence, and Walmart's in many ways been on the forefront of some of those innovations and uses, and so fascinating stuff. If you look at the last several years, going back to January 31st of 2014, when Doug McMillon took over, Walmart's up about 13% a year. S&P's up about 12% a year during that time frame. So outperformed the S&P pretty well. Stocks, quadrupled under the tenure of Macmillan. So most analysts, again, not surprised by who's replacing, and it's not even necessarily a knock on him. It's just more of a maybe surprise in timing, and many are pretty comfortable with it. Telsey Advisors, Joseph Feldman said Walmart Lifer, logical choice, and you look at Mizuho, signaling that they're closing the chapter on building out a digital foundation and moving towards accelerating AI innovation. So turning the page, new chapter, exciting times for Walmart.
Yeah, I think the age is sort of the thing that everybody's sort of stuck on, is that he's only 59, John Furner's 51, so sort of an unexpected pivot there in terms of you expect him to be a little bit older when you get his retirement announcements. But as you said, we are recovering now, stock only down about 1%. But interesting you bring up the transformation of Walmart from retail giant to, this tech-heavy, AI, multi-channel heavyweight now. Are the analyst community, are they saying anything about how they see that progressing? Because you mentioned it is sort of a pivotal point for them right now, as we are seeing this AI adoption. They have now this deal with ChatGPT and OpenAI to do their shopping through Walmart. That's going to roll out. Any commentary about that at all?
Well, that's been part of the commentary, I would say. So I don't think this changes that, but I do think that Mizuho, David Bellinger's comments about how this signals that they're now closing the door on that e-commerce build-out, trying to be an Amazon competitor, and really going full bore into this AI transition. So we'll see if more echo that, but you see it in their own commentary from Walmart. I mean, they've been talking about since last July how AI helps with cataloging and brings efficiencies. This has long been the area where we thought AI would make an impact, which is automation and efficiency gains, perhaps even downsizing workforces when possible. But Walmart's talked about how it's helped them keep their headcount steady at about 2 million. It's one of the world's biggest employers. It's the biggest merchant or place for commerce in the world. So fascinating times. And to your point, Doug McMillan, a little bit young maybe, but he's been there since he's been in his teens. Walmart lifer himself. So maybe just ready to sail off into the sunset.
Certainly, you've quadrupled the stock price. It was $25 when he took over in 2014. It's almost 102 right now. So job well done. Congratulations to him on his retirement. Alex, thanks for breaking that down for us. That's Alex Coffey, our senior equities contributor here on Schwab Network. I do want to welcome in our next guest this morning, joining us, Ted Thatcher, president of Bright Lake Wealth Management. Ted, thanks for joining us on this Friday morning. I'd love to get your thought. We are seeing a bit of a reversal in the markets after what has been a very choppy week, despite getting this government shutdown that everybody has been waiting for.
Yeah, Ronnie, it's great to be with you. It is choppy. I mean, the truth is, I think that volatility has almost been the name of the game, seems like, all year. And so, obviously, the government shutdown kind of coming to a close, I think is a good thing for Wall Street. Of course, Wall Street hates uncertainty. And it does, give the consumer hopefully some confidence, if for nothing else, the travel season going into the holidays here. But we are seeing the markets, bob around. Yesterday, the markets were down. Today, this morning, looks like they are recovering. But when we look at the macro picture, I think that we have to look at it through two lenses. I think we have to look at the consumer. It used to be the case that when we talked about the economy, that's all we talked about. We talked about just the consumer. But there has been this huge discrepancy the last several years.
Should the blowhorn be support? Let me look.
Wall Street and what's happening on Main Street for the average American consumer.
Oh, yeah, shut up.
As we take a look at the consumer,
If the 63 doesn't hold, yes.
Now know we may never get. We've got sentiment.
67-14 area. Actually, this double top.
And yet we're still getting results.
67-17.
People are still spending. People are still buying. The airline's saying they're still selling tickets.
That is if this first wall.
To you about the consumer and
Molly,
also
shut
about
up.
the economy.
It really is.
They didn't last long. We got a wall right here. If that doesn't hold, then we got this double top breakout. And that's pretty close to the top of the megaphone, so somewhere in that channel. Yes. Megaphone's definitely has to hold. And if that doesn't hold, then you got a pivot point at 67.89. Or the bottom of the orb. Top of the orb. Marley is a good-looking woman. I'll have to give her that. Might be a little used, but she's still good-looking.
Always clean as Jim.
Double top, baby. We have the 200. Marley, I love you.
That's next on Trading 360 on Schwab Network.
Doo-doo. Doo-doo. Doo-doo-doo-doo. Doo. Doo-doo-doo. Doo-doo-doo-doo. Doo. Doo-doo-doo.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, opening bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way
Is the best way.
Is it?
Yes, it is.
How I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
Carl's way is the best way.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks and 3 charts for you today. Rick Ducat will take us through the charts, and here to take us through his picks today is Tim Bowen, Chief Technical Trainer at StocksToTrade.com. Great to have you both with us as always.
Smooch.
Happy Friday to you. You would love to start, as we always do, with some thoughts on the action that we're seeing this morning. I'm going to check before I say it. We are still seeing a bit of a reversal here, but a very rough, wild week in the markets.
Yeah, I'd like to start out with, I want to, come with an apology. I went a little hard in the paint on Michael Burry last week, on last week's episode. Threw a few elbows. A couple days later, he rage quit his fund, pulled the carton in, took his ball, and went home. But one thing I would like to suggest to you, Michael, is, you can always just go back to posting, 50 pictures a day of Christian Bale as you, keep shorting these stocks, you can relive those glory days from 15 years ago. Kind of reminds me of Al Bundy celebrating 3 touchdowns with homecoming 30 years later. But that's where these shorts are, and they keep falling for these traps, much like yesterday. And because of that, I don't think anything has changed in the AI field. All 3 of my ideas today, AI related.
You give Michael Burry a little shit.
Alex Karp's book this week, CEO of Palantir. They just all, whether it be Elon or CEOs of NVIDIA, Palantir, just reminds me of when I grew up, got my first Apple II. Visionary CEOs just like Steve Jobs. AI is a game changer. I've said it's the biggest technology since fire, since the internal combustion, since electricity. And I just look at this morning, all 3 of these stocks that I sent over, big red to green moves, and love all 3 of these, as long as they don't take out today's lows. That's where that trade plan has to come into play. If they take out today's lows, probably some short-term shakiness, but I think all 3 of these incredible dip buys.
Shots fired to start the big 3. I like it, Tim. Keeping me on my toes this Friday. But you do have some big names in your big 3 today. Tesla. They are moving higher today, but have had a bit of a rough week, down almost 6% on the heels of that recall that we saw yesterday for their batteries. Walk us through this pick on Tesla.
So what I love, at the end of the day, the thesis is completely unchanged. I'm, absolutely, I've been an admirer of Elon. I mean, you can go back to my Twitter feed 12 years ago, I told people they were crazy to short this stock. So anytime you see a dip, I mean,
wish I'd known you back then, buddy. I was saying the same thing.
I think that, this is one of those stocks. I mean, you look at a 10-year chart, I think the next 10 years is going to be the same. So anytime you get some bad news, you get a pullback, those are buying opportunities. So that's where I wait for bad news to add in the dips.
All right, Rick, so as we look at this, we are talking about the dips pretty much across tech this whole week, but as we look specifically at Tesla, what are the technicals showing us?
So this is actually a pretty interesting chart here for several reasons. If we were to backtrack a little bit, 463, this red line that we see here, was an old high close. We only had one close. That was
new high on the SPY.
For a pullback, that was where we found resistance once more. That's about where we've hit a stumbling block 2 more times as well recently. So now we have this kind of M-shaped price pattern here where we had a supportive point around 400. Once again, if you backtrack here, that was the site of an old gap level. So we bounced off that gap level once, rather we broke above it, then we tested it and bounced. Now, yesterday, that was about where we bottomed out. Today we moved lower, and we can see here that we have our
Today's lunch,
going across these lows.
the ascending triangle
Here, and that was
on
about
Tesla.
our low point today. Now we've recovered above that 400 level. So staying above
I don't know
400
about
would be
that.
noteworthy today
More like a
as we
wedge.
conclude this trade.
No, it's an
here.
ascending.
So when we look at our moving averages, we have fallen below the two shorter term moving averages that we follow, our yellow 21-day and orange 63-day exponential moving averages. The 63 and orange
There's 500 bucks right there on the SPX on that bounce.
resistance point to watch as well.
So today, Jimmy had his
downward sloping channel still. We can also see that
beautiful
RSI has accelerated
chicken barley soup, which I just love. I mean, I never. If I get to my last bowl, I'm out there buying chicken boobies, celery, carrots, onion, barley,
we also have one to the downside
cumin,
here where we bounced
garlic and powder, onion powder,
so those would be some
garlic,
potential congestion areas to the upside and the downside.
All right, and right now we're looking at 405.61
broth,
where they're
chicken
trading above
broth.
that 400 threshold that you're keeping an eye on there. Now, Tim,
And
I
I'm
wanna
sticking
move to
it
your
in
next
my
pick, but I'm gonna have
Instapot.
to mention Michael Burry
I'm cooking
when
it
we
for
do
20
because
minutes.
he's got a really
Not
strong
even cooking the
position on
chicken.
it.
Just throw the
Although
chicken in
analyst
there.
coverage that I read this morning
Raw.
strongly disagree with his sentiments there. Nvidia ahead of
And maybe
their
simmer it
earnings.
a
They
few
got a bunch of
seconds
price
in the
target
onion
increases this morning.
and
the street extremely
garlic.
bullish as we come into their report next week. How about you?
And then adding my stuff, my celery,
Normally,
my carrots,
I kind of reject,
my onion.
Agreeing.
Well, the onion's already in there,
but
already
this is one of those
marinated,
situations where I agree.
or simmered, or whatever you want to call
Look
it.
at again, just everyone's
Barley.
talking like whatever Nvidia can
Chicken
produce,
broth.
we want to buy it. I mean, Microsoft is
A tablespoon of cumin.
They got, I don't even know, thousands,
Tablespoon
millions
of
things. They just
half a
hook them up
tablespoon or a
and
little
get
more
out
of
to them, which is a
garlic
different
and onion powder.
But
Sometimes
again,
a full.
Really, an unchanged thesis here from previous
Let
appearances.
it
on
cook in the
big
Instapot
three.
for 20
And
minutes, and
really,
then
the
let
biggest
it
reason I brought this stock is
let
again,
it
a lot of people have watched
depressurize
this go
on
up
its own for 20
literally
minutes.
years, maybe decades.
Then scoop it
And
up
I think
into
the shakiness of
cup
this
full
week
containers
will provide some buying opportunities that
and throw
people
about 10 of them in the
maybe
freezer,
didn't join that trend and are looking to join the next leg.
along with
All right,
two
so as we look
beautiful
at the technicals,
size
does it look like it's time
Texas
for someone
toast
to jump in late to the
with
party if
garlic
you're
and
missing the
onion.
Nvidia train right now?
That's the hard part is bull markets
cooked on an
won't let
iron
you in,
skillet.
bear markets won't let you out. Like if we did have this pullback here,
Whoa.
I thought it was interesting that we did not.
That's my seed tray I used to have right there where the garlic toast is, where I used to clean out my marijuana.
Made slightly higher lows
Now I
every
use it
time
for a
here.
toast
So, I thought that was
plate.
noteworthy that even though we did
Made in
break
Missouri.
below this trend line here in blue, we did not make any kind of
Bought it at an art show.
significant new low points here so far based on these relative extremes near 177. Our highs came in
Eating that
here
soup
just
with a
above
silver spoon.
a 212 here. That gives us this downward sloping white short.
There's the celery and the carrot.
Keep in mind here. So on the verge of potentially breaking through that
Uh-oh.
area of
1890.
if we were to move higher, around 195, 196 is
Randy,
to me because that's
we nailed it.
An old high point here, a bit of a chop and consolidation.
200 EMA.
Once again, when we look at our other studies, RSI, our measure of momentum, is recovering somewhat. But if we were to see a price breakout, RSI would likely also push above the trend line and above the 50 midline, which would be more of a, once again, a confirmatory signal for the bulls there that would add extra credence to the possibility of a stronger breakout taking hold. We are between our two moving averages that we mentioned earlier, 63 and 21-day EMAs coming in around 184 and 192 respectively. So those are some short-term areas to consider as well. Finally, when we look at volume profile, the heavy trading area is right about where we bounced. It lines up with our low points that I was mentioning.
There it is.
175 to 185 is really a key area.
Up on Easy Street, there's a grand right there,
This
folks.
being an important trading range based on the
Off that
volume.
pullback on the
If we were
200.
to dip below that, I mean, 165, these lows here would be the next possible point that stands out. If we move higher,
Do you have any
we
doubts
can
who I
see that
am?
Our +1 standard deviation channel, almost exactly in line with those old
Damn,
highs.
Randy.
Comes in just shy of 213 to the upside.
And if you look at Nvidia, you know, and some of this recent pullback we're seeing and how it's affected their market cap, you had a $5 billion conversation. They're now down below 4.6 trillion. That's how much much this pullback has cost them and some of that chatter around this Michael Burry put and some other headlines. But let's move on to another put position we've got here from Michael Burry and Palantir, who arguably had a really good earnings quarter, but maybe it's not a great time to report.
Is this going to go to 20? Is this going to go to $30?
I know the theme of all three stocks today kind of similar, but Palantir.
That's the question that we're asking today.
$20, $30 a share.
NVIDIA new high. Earnings next Thursday.
A lot of people hit me
NVIDIA.
up again. Back to.
Is it Thursday or Wednesday?
And they were like, "Hey, what do you think?" And
it is next Wednesday.
This reminds me of two trading related quotes, and it's the first one is, pessimists sound smart, optimists
swing
make money.
low.
Okay? And the
Yes, I
second
got
is,
one.
Markets can remain irrational longer than you can stay solvent. And I go back to when I first shared Palantir on the big three. It was back in August. Andrew left. Citron shorted it. It ground up to 200.
Yeah.
To those levels of that.
From Washboardjim, the founder of the Sneaky Snake Trading Strategy,
retail investors,
where I talk about chart patterns,
but a lot of them fell
moving
the
averages,
first quote of
and being in the now.
Smart, optimists make money. I think a lot of retail got trapped shorting into this. And when this thing starts pushing higher, it's going to create margin calls, force covers, and I think yet another, hard to believe, another parabolic move in Palantir, but I think it's
23, 23,
in the last
40,
month, we are down almost 3% on Palantir, but still the last
80,
12 months up
2410.
195% despite this pullback we've seen for Palantir.
Panic attack.
When we look at the technicals in the chart, Rick,
I'm having a
what
panic
are they
attack.
indicating for Palantir?
There's some strong similarities
Panic
between
attack.
all three charts. In this case, the point I would be trying to make is that even though we had an intraday dip beyond a significant supportive level, we've recovered back above it with some vigor, it seems like here. So if we were to look at why we're looking at this 169 area, this dark green line, that was the low point that we had after a gap up. That was also a subsequent breakdown point here. Sometimes when you look for these key areas and you see this huge fall to the downside, in this case here, this is exactly the kind of thing we'd be looking for, is when the price point is breached, it triggers the cascade of orders and results in a more energetic reaction here. However, from that point, we stabilized around 145, which was our old highs, and then the lows that followed after that. Then we had our range-bound period here between about 187 to 169 or so, 170. We pushed to the upside. Now we have held on to that 169 area once again. So a key point for the bulls to recapture here. Our 63-day EMA lines up very closely, so a bit of extra emphasis on that as a point that we would want to see overcome if we had a bullish outlook on this name here. RSI still a bit lower, not really too terribly much to say about that when we did make marginally lower lows, but we'll have to see what happens as we head into the close today. There's still quite a bit of time left in this trading day. Finally, when we look here, we can see that we have our volume node here that lines up about with our current prices near 183. So once again, this is really this whole area 175 to 185. That's where the bulls need to recapture and push above for hope of continuing this uptrend.
Yeah, and right now we're trading at 176.21 for Palantir right now. I want to thank you both for being with us for the Big Three today. Of course, Tim Bowen and Rick Duquette, our lead market technician here on Schwab Network. Tim, we hope you have a great weekend. And coming up next, we're going to spotlight the state of the economy and the consumer as we head into the holiday shopping season. That's next on Trading 360.
My man. Hey! Sometimes, you could have done better.
Boom, 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 boom.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action.
Boom,
Tech check,
boom,
options
boom,
morning,
boom.
futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight consumer trends ahead of the holiday shopping season. Joining us now is Shelly Antonevich, the chief economist and investment company. Shelly, thank you so much for being with us. You know, I'd love to get your thoughts on some of this action that we're seeing now that we have this government shutdown, this choppiness that we've had this week, while we still remain in a data blackout, and it's seemingly unknown when or if at all we're going to get any of that data.
Yeah, it is. I mean, right now, BLS is looking at, you know, when they can start putting out some of the employment data. You know, they're reassessing. I was just looking on their website. They're reassessing the schedule, and they're going to publish, you know, dates going forward. I would think that they could get the September employment data out fairly quickly. I mean, that was almost done and ready to be published just days before the government actually shut down. And while there are aspects of the October employment report they can't go back and collect, which would be the household survey data, they certainly could go back and retroactively collect the data for the establishment survey. Now, if they have the bandwidth to do that, that's another question. Because not only that, you know, you're going to be coming up on trying to get the November data out. And this is data, the employment picture data is going to be critically important to the Fed's decision whether or not to cut rates in December.
La 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 la.
There's very little expectation.
We're butting back down.
Even odds that the Fed would cut rates in December because, as you know, Chairman Powell said, they're driving in a fog, and when you drive in the fog, you slow down.
Yes, and it is data fog, but you bring up a great point about September. Everybody's talking about October because we got commentary from the White House saying they feel the October data may never come because of its collection status. But September was finished before the government shut down. How important and also how useful do you think that data will be now that we're going to be months removed by the time we get to December? And you mentioned the November collection. That data not expected to come out, some of it, the inflation data at least, until the same day as the Fed meeting. The jobs data, I think, coming out 5 days ahead, but assuming that timeline stays in place as it stands.
Yeah, I mean, any information is critical to the Fed, and they will take it into consideration if it's 5 days ahead. I think September will help give them comfort about the rate cut they did in October. And I think that all information is better than no information, which is really what they've been living with right now, just cobbling together bits and pieces of third-party data to get a very murky picture of where the economy stands right now. And certainly the Fed is going to take into consideration the fact that the government was shut down, and we're expecting about a 1 to 2 percentage point hit to fourth quarter GDP because of that shutdown. Now, in most cases, much of that sort of hit will be made up, because people, who were furloughed and are now getting their paychecks will turn around and they will buy that durable goods. I don't know. They'll buy that, the car, the washing machine, whatever they needed to purchase. And those purchases have just
Oh, you're so full of shit.
It's more some of the discretionary service spending that you can't make up.
I want to jump to GDP in 1 second, but I have one follow-up about the data. With this sort of cobbled together effect that we've been using with this private data, this is the only thing we've had access to in the data fog. You mentioned the murky picture. What is the murky picture for you from the data that we have been able to see over the last 44 odd days?
Well, certainly Q3 for me, I mean, I completely agree with the current Atlanta Fed GDP estimate, which is a roughly 4% GDP growth. And if we take that momentum and we move into the fourth quarter, you would expect something between, 2 to 3% growth there. However, there were signs
We're at the 21.
The consumer was potentially slowing down. We're looking at.
Oh, we're looking at what? Some of these people get me. I wonder if they got her from CNBC. Well, now it's time for my hot chocolate. Oh, I should have never moved that. Damn it. Marley, how many men have you been with? I'm just curious.
With us today on Trading 360. That's IEC, and we'll also have our disruptors with George Tillis. We'll be looking at Apple and iPhone sales coming out of China. He'll break down that news and give us an example trade next on Trading 360.
SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere on
free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series
Technical analysis.
techniques like trend analysis, price patterns, moving averages,
Technical analysis.
Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning.
Technical analysis.
Welcome back to Trading 360. I'm Marley Caden here at our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets and welcome Nicole Catalese, host of Opening Bell and the Watch List here on Schwab Network. Nicole, good morning to you. Happy Friday. What's caught your eye so far this morning?
The complete turnaround that we saw from the selling that we saw yesterday, which was pretty dramatic as the day went on, only to see that
I love you, Nicole.
this morning with the minute that bell rang, down arrows. However, you see now that the S&P 500 is into the green here, and you have energy, tech, utilities, industrials leading the way here on Wall Street. The two things that have been weighing on the minds of investors are AI, the valuation and debt that's been accruing, and also whether or not the Fed will cut rates in December. So those are the two big underlying stories that have been weighing on stocks. We've seen the NASDAQ have several sell-offs over the past month or so. It's been down about 2% this week, though everything is clawing its way back. I mean, as far as specific movers here, I think the Warner Brothers story is exciting. The stock in 6 months is up over 140%. So keep an eye on the Warner Brothers story because their bidders are stepping in. As far as earnings, you had Applied Materials with a down arrow, StubHub, which had a wider loss and actually didn't give the guidance that people were expecting, so that's down over 20%. And then positive comments on Disney and NVIDIA, several price target hikes on NVIDIA. And Apple has some great sales in China for the Apple 17 phone. In fact, it was in this particular period, 80% of phones sold were actually the 17, so that was up 22% year over year. So those were some pieces and bits of good news. Bitcoin has been under pressure, has been under 100,000.
Yeah, staying below that mark too. And the last I looked, I think around 97,000. But I want to talk about Gap this morning. We're seeing another big retail name getting an upgrade to buy from another big firm here. This time Jeffries. Walk us through Jeffries' optimism with Gap.
Yeah, and there's so much that goes through this, and I'm pulling up an article that I was reading in September, which I'm going to quote in a moment. But the big picture is you're going to have a lot of these retailers report next week. And Jeffries, ahead of the report for the Gap next week, is being really optimistic. They put a buy instead of a hold, up from a hold, with a price target of $30, up from $22. The Gap is trading at $24 today. Morgan Stanley's at $30, UBS is at $25, Telsey's at $24. The idea here is that there's great momentum for this company, that the market
How'd I get there?
They really seem to be doing well and have meaningful upside, and that the beauty segment and beauty and accessories, personal care, is an area that could be underestimated as well. In fact, they've been naming some industry executives, one from Estee Lauder, also another who helped to transform Coach and Tiffany, another from Nordstrom. And so we did see now that J. Crew, Kate Spade, these are former executives who are really helping to push this group forward for personal products, beauty and stuff. So it's going to be an array. Of course, there's Gap, Old Navy, Athleta, and Banana. So the Gap may in fact see
Banana.
Store may in fact see
Put the lime in the crocodile.
Sales growth, and Jeffries comes on and just talks about the momentum overall that's happening there. So overall, and the last thing I'll note is the partnership with Google Cloud.
Nicole, she's after your job, baby.
Enhance customer experience, the business, getting the products out farther, faster, and that's something that has also been talked about for this company as well. So a lot of things happening under new leadership, don't forget, and so it's been a strong turnaround.
You got a double bottom and a double top.
Yes, certainly. And this price target, about 25% higher than where they're trading right now. Nicole, we appreciate you breaking that down for us. That's Nicole Penelides. And now it's time for the disruptors. George Tillis, our senior markets correspondent, is here with today's company. We're talking about Apple. Apple got these China sales.
I don't know how she got on the
came
scene
out
and
here,
become like
George.
the boss.
Some really impressive figures here for the iPhone 17.
She never was around.
We are seeing a move to the upside for Apple on the heels of this.
George.
Not a considerable move, but we did just see a turnaround in the markets. Can you walk us through some of the information we're getting about the China sales?
Sure, yeah. I mean, I think if you look at Apple, interesting enough, it's performed, I would say, exceptionally well, considering what's going on with the other larger cap names, NVIDIA, Broadcom, Meta Platforms, for instance, are not performing very well. And I think that speaks to Apple in terms of their spendthrift aspects of capital expenditures. And we talked about this when the company reported earnings back in late October, where as a percent of total sales, CapEx, including R&D expenses, were still less than 15%. And so with that said, I think that the market has been rewarding Apple from a balance sheet conservative standpoint versus a lot of the criticisms Apple took over the last year that they had invested perhaps enough in artificial intelligence. And now we're seeing the aspects of their core business, which is consumer products. In particular, we know that the iPhone is their largest hardware sales business. Their China sales, as Nicole alluded to, if you look since the release of the iPhone 17, up 22% year over year. Importantly enough, that was better than last year when they released the iPhone 16 line of products, and they actually showed sales which were down the last year about 3.6% year over year. So I think this is important enough that it seems to be more popular right now, considering, again, total sales for smartphones in Q3, as reported in China, were actually down, but iPhone sales were higher in China. So for what it's worth, it seems to be gaining a lot of popularity this year in China. And importantly enough, again, if you look at last quarter for Apple, sales in China were actually down for the quarter year over year. So this actually gives them a nice catalyst to the upside, considering the iPhone 17 seems to be very popular across the Chinese mainstay markets.
I thought that was very interesting, too, to see that the sales were down almost 3% in that third quarter, year over year, in the China overall smartphone market. Fascinating, especially with the rise we're seeing in the iPhone. So with Apple's performance of late, we had all these conversations pre-earnings about it being one of the laggards in the Mag 7, and now, they're really holding strong, up more than 10% just in the last month. How would you structure an example trade here, George?
Yeah, so I think the narrative right now is still the case where the companies, at least the larger cap space, that are more conservative on CapEx spending are being rewarded. And if you look at the trend for Apple, it doesn't look like there's anything interrupted, irrespective of some of the other names they mentioned, which are down considerably. So with that said, if you look at the stock trending still above the 20 and 50-day moving average, I'm going to participate in continuation of the trend. And I'm going to go out to January, because I don't necessarily think the stock is going to move aggressively to the upside, but nonetheless may end up moving slowly. So with 63 days to expiration, I'm going to basically buy a call vertical, purchasing the 275 call, these are the monthly contracts in January, then selling the 280 against it. And so altogether, it costs you about $2.50 a share, or $250 a contract. So the whole premise is bullish continuation, slow and steady. 277.50 is your break even, and you're outlaying 250 to make 250. So you basically have a 1-to-1 return on risk, and that will occur max profit of 250 if the stock is 280 or higher by expiration.
George, we appreciate you being with us to talk Apple and for that example trade today. That's George Tillis. And coming up next, it's time for our 360 round. We're diving into the earnings from Applied Materials.
We both start with 50.
And earnings the top estimates. We'll break down the numbers and why next on Trading 360.
I'm going to go make my chocolate. I'll be right back.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investment trends right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network. Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to discuss applied materials earnings. Joining us now, Stephen Sopko, semiconductor and deep tech industry analyst at Hyperframe Research, and William Kerwin, the equity analyst at Morningstar. Thank you both for being with us. Stephen, let's start with you. I'd love to have some of your key takeaways from this report. You know, top and bottom line beat, but under pressure this morning.
It's under pressure, I think, because those export controls have been really weighing on the company for a couple of years now. If you look at China's contribution to their bottom, their revenue, it's dropped from 45%, where it was a couple of years ago, down to 25% in the current report. And I think the challenge there has been where do you go when one of your key markets is under that kind of pressure? Well, the company's done an amazing job of pivoting into Taiwan and Korea and had a record-setting year despite those pressures. That said, when we look into 2026, the question is, can they continue that sort of growth outside of those export control restricted countries?
All right, Steve, we're going to come back to those export controls in just a second, but I want to get William's thoughts. You actually raised your fair value estimate to $225 for applied materials. What in the report made you even more confident on the stock?
Hey, Matt.
This is really a case of a contrasting dynamic between.
So we pulled back to the 50 here with 3 white soldiers. We got triple top. Triple top coming. Marley?
But a much better opportunity than some of the frothy valuations that we're seeing in the market. It's hard to find an undervalued name in the AI trade.
Oh, it is?
When you're looking at an AI exposed stock and it's fairly valued or just slightly under our fair value estimate at $225 a share, we think it could be an opportunity.
And coming back to you, Stephen, for the last question, the reaction from the market, William mentioned it might have just been a bit of an interesting time to put out these numbers with a lot of the questions about valuations and the AI trade. Does the reaction make sense to you, or are they mispricing or misinterpreting AMAC right now?
I think AMAC is a long-term play. This is one of those companies where unless something external happens to it, like export controls or like other changes in the broader market, it is a company that's steady, it's stable, it's working with customers on a 1 to 2 year forecast on their demands. So this is one of those things where the company has been around for 55 years and it is a stable part of one of the most complex supply chains in the world. So I think that a little bit of reaction to it is normal, but I think the company fundamentals are strong. They've got an amazing customer base and I think a good plan for the future.
We appreciate you both being with us this morning for our 360 panel to break down applied materials. They're recovering now, only down about 0.2% following their better than expected report that Stephen Stopko from Hyperframe Research and William Kerwin from Morningstar. Also want to thank all of you for joining us today on Trading 360. I'm Mark Davis. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on SchwabNetwork.com. I'll be back with Market on Close at 3 p.m. Eastern, 2 Central today.
Thank God.
Sam Bodice. But stay with us. Fast Market with Don King Hall is coming up next. Have a great weekend.
3 hours away from you. Unless you show up again. This woman does try hard. I have to give her that.
Whether you're an experienced investor or just getting started,
She is beautiful.
Charles Schwab offers a webcast that's right.
I have to give her that. And I'd have a hard time working with her. Because I'd always be staring at her boobs. So it'd be a problem. Sorry, Marley, but it's true.
Well, you just have to stop looking at him.
Rob's nailing it today. We're going higher. We are going higher. Do you think we'll break the triple top today? Because I think I'm going to have to go down to the IRS and see what they're doing. We are going higher. We have a triple top. We're consolidating. It's getting that time of day. We've had a good run. Fat cats are at lunch. People are at lunch. I had my lunch. I'm back. And I'm going to make a cup of hot chocolate. And then I'm going to go down to the IRS and look at the paint job. We are going higher. We are going higher. So now I have my hot chocolate. And after this, I will go down and check out the building. Damn, that's good stuff. We are going higher. Anybody on YouTube have a question to ask Washboard Jim? Happy being in the Now song? Yes, I'll do it for you. I have a special request. Yeah. Damn. I had a triple top, has nowhere to go. Will it break out for the winter snow? Whoa. It's 69 degrees outside, and the mice must hide. Are we gonna break the triple top? 67, 70. Let's break this chart pattern. It's a triple top, will it ever stop? Whoa! She gonna get it. There it goes. There's a grand on that pullback right there. Off the 50 SMA. Boom, boom, and a boom. And again, and again, and again, and again. Broke out the triple top. Do 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 do.
He's 51 years old, Diane's been with the company 30 years. He started out as an hourly associate.
Who did?
I'm sure his hourly wage is about to go up a little bit, Diane. But in terms of the other names that are coming out, remember, we would have loved to have got some retail sales data today, but we didn't. But we did get Bank of America. Their retail data was really strong for the month of October. So hopefully that'll show up in some of these the retail earnings. Target has its own problems, but Home Depot and Lowe's, and especially Walmart, does SNAP benefits, does that affect Walmart's earnings? They get a lot of their income from SNAP benefits. So I think there's a lot going on here and going into retail's earnings, but retail always focuses on the U.S. consumer. Bank of America's data says
He's right. Walmart really nails it when it comes to SNAP.
Yeah, it would be interesting to see if there's impact, because at the same time, when we talk about this K-shaped economy, Walmart has pulled in a lot of the six-figure income households. So, you know, maybe it will hold up, maybe there will be.
Really?
We'll certainly see.
Six-figure?
We've got full example trades put together for Microsoft. We'll have more fast markets.
Oh, that's a bullshit. Oh, God. I bet you I went to Walmart. I bet you I couldn't find a six-figure salary in there. Anybody that walks in that store with six figures, you got to be kidding me. I do, but I'm special. The only thing I buy at Walmart, six-figure, is janitorial supplies, health and beauty aids, and food. My chicken barley soup, because I can get chicken there cheap. I mean cheap. I mean it's not cheap, but it's cheaper, a lot cheaper than it is up here at the grocery store. I mean, okay, I walk up to the grocery store, I'm going to go up there and look at the chicken breast, and I'm going to take a picture of it when I get ready to leave. And I can go to Walmart and get the same shit for $12. And I probably only get 5 chicken breasts up here, where I'd get 6 at Walmart. I'm going to guess it's 22 or 25, one or the other. That alone, just the chicken breast. Okay, my soup. If I went to buy the supplies to do my barley soup, it would cost me, for the first batch, and then the second batch would be cheaper. The first batch would be about $20, and the second batch would be about $12. Because I already would have the chicken breast for the first batch to do the second batch, and then I still have another breast left to do a salad or something, a couple salads. I go up here to the store. I'm right off the bat, just the chicken alone is going to pay for one batch plus. And I'm getting a whole nother batch of free if I go to Walmart. And less. I mean more. And it's really not that much. It's celery, an onion, a couple onions, a thing of celery, and carrots. 2 bags of carrots at $1.47, which up here at the store would cost me $2.50 for a bag, maybe more. And actually, the chicken breast at Walmart tastes better than the tough stuff I get up there at the frickin', what would I call it? Gucci food? Gucci bag? If I'm going to buy groceries up here at the grocery store, I might as well bring a Gucci bag with me.
Like they did today in Microsoft. I mean, think about it, Diane. Microsoft traded $4.97. It's $13 off its lows from this morning. So again, buying dips in this name. When the market recovers, Microsoft will be a leader.
Okay, Tom, what's your take?
Well, you take a look at it, the stock had been consolidating, then popped in the last couple of earnings events, and then has come back down. And this is all based on, the AI infrastructure build-out. How much it's costing these companies? Is it going to be monetizable? Well, the OpenAI deal that they have, they've invested $13 billion in OpenAI, and OpenAI came out with, if they're a $500 billion company, Microsoft shares going to be worth about $135 billion. So that gave the market some clarity now. Kevin mentioned we pulled back since that was kind of announced since last earnings. And if you take a look at it, it was on an 8-session losing streak before righting the ship earlier this week. That was the longest losing streak since 2011. But at the same time, if you looked at their earnings, Kevin mentioned that their earnings have been good. Growth in cloud in Azure is up near the 30% level. It's taking some market share away from the leader, AWS. But there's still concerns about the spend into their AI investment. Operating margins, or operating growth was above 30% across all their segments of their company last quarter, so that's a positive also. But we're seeing some consolidation after that slip from, above the 550 level just about a week and a half ago.
Okay, all right, let's get into these trade examples. Kev, why don't we start out with yours? What's your approach today?
Mine is basically the options equivalent of doing a covered call strategy. So I went out to the December 5th, gave myself 3 weeks out to the December 5th expiration, bought the 510, basically the at-the-money call in Microsoft, and then I went to, not this week, but next week, the November 21st, and sold the 525. Lined that up with the expected move of about $14.50. buying the at the money, selling 14.5 traders round, so selling the $15 higher strikes. This is just your, a long call diagonal spread. It's in the calendar spread family, but that embedded vertical spread, that 10-25 vertical spread, gives it a delta of about 30, Diane. So buying and giving myself one opportunity to extend duration into the middle week. So spending about $8.70. It's trading about $9.45 now. And by the way, I already moved the strikes higher. So this is a stock that jumped off its lows and is higher now. This diagonal now trading about $9.35, Diane. Tom?
Let's go ahead. December 5th weekly option. So 3 weeks to expiration on this one. You're going to buy that at the money 5-10 strike call. It's got the higher delta. You're buying Vega, right? Because you're buying an option that's further out. And then in the near term, November 21st, monthly cycle that expires in 7 days, sell the 525 strike call. So a bullish $15 wide call diagonal. It's 2 weeks wide between the two option series. The debt you pay is going to be a risk. We've got 870 here. That's where it was trading earlier. Now trading about 940. But the debt you pay is going to be a risk. And even if you pay 940 for this spread, it's still less than still less than the width of this bullish call diagonal. Now, where's your break even? Where do you start making money on this? Well, you can see here from the risk profile, at near that 525 level is going to be the most potential profitability on this one. But anything maybe above the 514, 515 level is going to be profitability, as Kevin mentioned. You have that one opportunity to roll into the November 28th weekly cycle. You collect credits on that. That increases potential profitability. That reduces risk. And then you'll have another opportunity to roll into the December 5th weekly, which would create a bullish call vertical on that. The idea here is the market's open, you can roll those options, you collect credits, you increase potential profitability. But this is definitely a bullish trade. You definitely need the stock to move above maybe 514, 515 to start getting some profitability on this trade. So there's the bullish side of this. I looked at something a little bit more passive than Kevin, and my price is probably going to be wrong because the stock's up about $3 from when we looked at this earlier. But I went out to the November 28th weekly cycle, Kev. So 14 days to expiration. I'm just going to sell an out-of-the-money passive neutral to bearish call vertical. If you think the stock's going to continue to consolidate, maybe even pull back, but hey, maybe I can be wrong. It can go higher and I can still be profitable. Selling the November 28th weekly 520 call, buying the 530 call, short $10 wide, neutral to bearish. Call vertical collecting, I've got 210 credit on here. You probably collect 230 on it right now, which would raise your break even. If you collect 210, takes your break even up to 522.10. That's about $12 out of the money to the upside on this one. And Kevin, this is one of those strategies where, hey, you're not like uber bearish on this stock, but maybe you own the shares, or maybe you're speculating that the stock's going to at least consolidate. Maybe it can go a little bit higher, but as long as it remains below that 520 level, you're going to be profitable on this one, Kev.
68.8% chance of finishing out of the money, despite only being about $10 above the market and with an expected move of about almost $19. So still one that is, like I said, gives you plenty of room on this name. Now, you want to be careful, right? It's already trading higher than when we looked at it, just like the diagonal is trading higher. That's what happens when the stock goes up. So
we're at the 21 again.
You're hoping for kind of a stall or going up a little slower. Next week's going to be a big week for the market and for stocks in general. It wouldn't surprise me, Tom, if next week in Microsoft, they'll be in right now, from the Nov 21st expiration, there's an expected market maker move.
67.80s.
NVIDIA's earnings are going to be for the rest of this sector. Next week's going to be a big week, and they'll all travel. The global trade will travel off of NVIDIA, but I think next week's going to be a high volatility week again, Tom.
you make a great point there because, you know, a lot of these tech companies are probably going to move in unison or in correlation somehow to what happens with NVIDIA and what happens to the overall market due to NVIDIA earnings. But Diane, as Kevin mentioned, it might be a volatile week next week due to that earnings event. But at the same time, both of these trades are risk defined. I think that's really key.
All right, as you mentioned, risk defined. That's the approach there. Thanks, guys. Coming up, we've got cash tags. The team from Lightfolio will be along with new sentiment data on strategy. It's under pressure today amid some pressure we've been watching in Bitcoin. You're right here on Schwab Network Fast Market. We'll be right back.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Mommy's mother.
No, you could have done better. Same goes for where you
I'm
invest.
his mother.
And invest smarter with Schwab.
I'm Salvanis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting
I'm
started,
his
Schwab
mother.
offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/webcast and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment, taking a look at strategy. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Lightfolio. So, Andy, thank you so much for joining us. Happy Friday.
There's Andy, the prison guy.
Alongside Bitcoin today, because you've been watching the Bitcoin weakness, and we know often strategies, formerly known as MicroStrategy, can be a proxy. So, shares are under some pressure. There was a rumor that Michael Saylor was offloading Bitcoin. He tweeted today, or posted on X, however you say it now, quote, "We are buying." I'm interested to know what when you look across your data, recent data, how strategy stacks up.
Better hold here.
It
went to 7 something.
You know, it feels like panic time. It's down from 126,000 to 96,000. But if you zoom out just a little bit, you know, Bitcoin is.
We're looking at 83,000, my friend.
Since before the election a year ago. Still a very strong asset, but MicroStrategy is under pressure because Bitcoin is down. It's also under pressure because there's just simply a lot more competition for what they do. There were years and years from 2020 essentially till 2023, 2024 where strategy or MicroStrategy was the only proxy that an individual investor could use in the stock market to get exposure to Bitcoin. But that has changed dramatically. Now we have all the Bitcoin ETFs, we have other Bitcoin treasury companies that are competing for those same dollars. And while the pool of dollars is expanding, a lot less attention is being paid to strategy as a percentage of that whole. So I think that's the biggest thing that the biggest takeaway here is Bitcoin's under pressure, strategy's under pressure, but now we've got strategy to the point where its Bitcoin holdings are essentially the same value as its market cap. It was before you were paying a very significant premium to have that single exposure to Bitcoin in the stock market. That's gone away. Now we've got strategy at around $200. It's right in line with its Bitcoin holdings value, and so it's become finally a little bit of a value play here.
Andy, that was kind of the topic that I was going to bring up, because it's actually the market cap of MicroStrategy right now, or strategy, is actually lower than it, or just above its Bitcoin holdings, right in line. That's a concern, right? Because there's ETFs out there now that you can get into Bitcoin. More firms are allowing more cryptocurrency trading. That's a positive here. But when you look at Bitcoin as a whole, and there's a big high correlation, it's finally the price of strategy versus Bitcoin is at the widest level that it's been over the last couple of years here. Is that reflective that, hey, even though there's competition for maybe money going into crypto, at the same time, maybe this is a good opportunity for strategy, especially if we see some consolidation or maybe a turnaround here in Bitcoin itself?
Yeah, I think a turnaround in Bitcoin itself would obviously be very positive for strategy. But beyond that, I want to kind of take you back. In August of 2020, when MicroStrategy announced it was buying Bitcoin and putting it on the balance sheet,
770.
Our business, the stock was $14. 2 years later, December of 2022, the stock was $14. Michael Saylor has a history of his vision being too early for Wall Street. And I think that's exactly what's going on here. I don't think that strategy is purely a proxy on Bitcoin. I think strategy is essentially becoming, a central bank for the digitization of money. They own 4, maybe 5% is where they're going to end up.
770.
That will ever be printed. And when a organization
780
owns 4 or 5% of
Profit.
all of the hard money, we call that a central bank. And you can start to see that strategy forming out as they put these preferred products on.
Oh, it was off to 63.
SPRC is out there paying a 10.5% tax deferred dividend. It's essentially acting like a money market account for people. If you believe Bitcoin is going to be a central part of a new digital monetary global system, then strategy once again is very far ahead of the game. If you don't believe that, then strategy is a proxy for Bitcoin, and it's a binary bet. So you just have to figure out which side you're on. And if you believe that Michael Saylor once again is ahead of Wall Street by years, then probably a decent opportunity here to start picking up some exposure.
But there's concentration risk, right? And then especially when you see the drawdown in Bitcoin, especially if it gets, further, it could potentially impact MicroStrategy or strategies, I guess, ability to service debt, because that's the other thing, they've issued debt as well. So how do you think about that?
Yeah, the way I think about it is very similar to if you were investing in someone in an organization that was buying, property, real estate buildings in Manhattan. You have, and they're offering to pay you dividends if you loan them the money to do that. The way that you get there is that you believe the underlying asset is ultimately undervalued, in this case Bitcoin, and is going to go higher. If you believe that, then the debt obligations, the dividend obligations that they have into the future become very, very small as Bitcoin moves higher. If Bitcoin doesn't move higher, if it doesn't pan out, if that real estate development project doesn't work, then you're in trouble, because the entire organization has levered itself to future obligations. So you really have to believe, in order to invest in strategy, you have to be able to understand
$9.50.
And you have to be a believer in the core principle that Bitcoin becomes a transformative part of a new digital money era.
Okay, Andy, I think I know the answer to this, but I'm going to ask you, point blank, because of that correlation we talk about, right? If you look at Bitcoin and then MicroStrategy, if you like Bitcoin, right, you guys are probably pretty positive on Bitcoin. According to your data, that just means that maybe MicroStrategy is a little bit oversold here.
Yeah, I think that it's finally gotten, like we talked about before, it's finally gotten to the point where the multiple to net asset value is low enough that you're not paying an extraordinary premium over Bitcoin. And so, again, if you're ready for the volatility that strategy offers, you have to be able to accept that. But as an exposure to Bitcoin, as a levered exposure to Bitcoin, I think that it's finally at a price here that starts to make sense, and at a ratio to Bitcoin that starts to make sense at this point. So, after about a year of very, very troublesome, returns and strategy, I'm starting to see light at the end of the tunnel, especially, as we compare it to Bitcoin. So, and yes, we are very much bullish on Bitcoin and have been for a long time.
You're full of shit.
All right, thank you, Andy. That's Andy Swan, co-founder of Lightfolio. Appreciate the deep dive there. Now, for the trading perspective on all things strategy, I'll yield the floor to you, Tom. We'll bring Kevin back in here. Tom, final thought before you guys get to the example trade.
Yeah, you look at strategy and you've got to look at Bitcoin. I mean, the correlation's there. And as I mentioned, it's broken off from that correlation a little bit where strategy's underperforming. And you mentioned, the ability for investors and traders to look maybe elsewhere when this was the proxy for Bitcoin for years. But Kevin, some volatility today. Stock got down to under $195 today. High of about 108.80 to the upside, but look at that chart right there. I mean, the pullback's pretty significant. How do you want to look at this one from an example trade?
If people do two things.
What do they do?
One, notice that Strategy's beta is 3.2 beta. That tells you it's going to move. Also, if you lay the chart of Bitcoin over Strategy, it shows you that Strategy moves in line with Bitcoin. In line. So, therefore, based on that, tell me where Bitcoin's going, Tom, I'll tell you where Strategy's going. So, if I don't know, which I don't, my goal is to not be a bug on the windshield of this stock moving in one direction or the other, frankly. And that calls for a strategy where you make money if the stock moves in either direction, and you lose money if the stock stays right here. There's two ways to do it. You could do a long iron condor, or you could do the 1/2 back ratio. And so I chose, in this case, the back ratio spread. I went to the November 28th, so I gave myself a little time. I sold the 175 call, Tom. Now think about that. That's $30 in the money. The expected move out to then, about $27.50. What did I buy against that? I bought 2 of the 200 calls. And so I've got short one, 175, long 2 of the 200 calls, which are already a couple dollars in the money. What did I do for that? I took in about a 315 credit on that spread. It's already out to about 350 credit. So I'm taking in a credit. I've got, if the stock were to break down towards 175, I don't lose money, but on the upside, Tom, if it were to rally significantly, I've got an extra call unit that gives me positive gamma and unlimited profits on the upside.
Yeah, let's break this one down. We talk about back ratios, just not that often, but this is that strategy where it's a need a move type of strategy. You can see here from the risk profile. Let's break it down. November 28th, weekly options, 14 days to expiration. Going to sell 1 deep in the money, 175 strike call, buy 2 of the slightly in the money 200 strike calls, collecting. We've got 315 credit. It might be a little bit higher than that right now. But if you collect that 315 credit, what does that mean? Well, below the downside break even, which is 178.15, that's how much you can make. $315 per 1/2 spread that you put on. Now, Kevin mentioned the upside exposure is where you start to really profit on this one, and that's above the break even of 221.85 to the upside, where you can have infinite gains if the stock turns around and continues to move higher. That's about $15 above the current share price. Kevin mentioned that big beta in this name.
We're back down to the 63.
Which is the pinnacle is 1, right? So 3.2. So it moves triple what the S&P 500 does on a percentage basis. So keep that in mind. That's a dynamic number. The beta is also.
It is, ain't
Keep
it?
that in mind. Now, where do you lose on this strategy? Well, you lose if the stock sticks around the 200 level. Per spread that you have on, about $2,185 in risk on that, but that's right at or near that 200 strike. So you don't want it to stay there. You want it to go either below 178.15 for profitability. You get to keep the credit you collected, or go above 221.85 to the upside. That's where you start getting some real gains because you have that extra unit. Now that if you didn't have the extra unit, right, it would just be a short 175, 200 call vertical. So that $2,500 in risk, you have to add the $315 that you make on the credit that you collect. That's why the risk on this trade is $21.85 if the stock sticks around 200. But Diane, this kind of takes advantage of with any expectations that you might have that either strategy falls out of bed and continues to move to the downside or rallies to the upside pretty handily.
The question is, are we going to rally after this breakout?
About a $16 move.
Or have we had to rally?
Get those gains on that side.
I started keeping a tally, you guys, on how many times we said strategy, whether it's the company.
I'm going to go down there and check the store.
All right, good stuff there, guys. Coming up, the breakdown, we are taking a look at Circle after one analyst becomes more bullish on the stock. Our investors circling back. We'll see. We'll be right back.
Doom, ba-doom, 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 doom.
The Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services.
Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall live on for the big board. Before we get to the breakdown, we'll give you a check on where markets stand as we get closer to the bottom of the hour. The S&P 500 has gained right now, better by 0.4%. Energy and information technology, the leaders there at the top of the leaderboard. Micron, DoorDash, and Super Micro for the S&P 500. Down lower by just about 0.25%. So once again, we are off the lows of the session. NASDAQ 100 has gained more than 0.5%. So too do small caps. The Russell 2000 higher by 0.5%. Investors are circling back to Circle today after receiving an upgrade from the team at Baird. The firm is boosting its view on the company, upgrading Circle to outperform with a $110 price target. The stock has been
Okay, I'm gonna head out.
because of that
Check on the paint job.
That allowed early investors, they can offload shares. Barrett says the coast is clear now. It sees a few factors,
3 black crows,
including growth in USDC stablecoin circulation. Time now for the breakdown. For that, we want to welcome in George Sillis, senior markets correspondent, to take a closer look at Circle. All right, so how do we look at this one in the context of this note that we see from an analyst today?
Well, I think this is an interesting call. I mean, I was just looking at the price action since the company went public back in June, and it's fairly higher from the opening price. So we've seen this huge run up in Circle. That was essentially part and parcel of what we saw with Bitcoin and the crypto markets, which had done extremely well. All of them are drifting to the downside as of late, with Bitcoin actually breaching below 100,000 again. But nonetheless, Circle is essentially, one of the leaders, if not the largest player in the stablecoin markets. They essentially have about $62 billion in treasury and cash, which are used, of course, to back the issuances of the payment processing coins and stable coins that they have about 25% market share in. They're also applying for a bank charter. So for what it's worth, they seem to be moving more towards regulatory legitimacy in the stablecoin framework. But nonetheless, if you look at the Barrett analysts, Diane, they've actually got an outperform rating on the stock. They did maintain their price target on the name to $110. And they talk about the underperformance since essentially June. That is primarily due to the lockup, which the company denoted expired when they reported earnings earlier this week on the 13th. That has created some pressure on the underlying shares. But the Barrett analyst is still kind of constructive, considering they say that the valuation looks reasonable. The lockup overhang may be now abating, considering, again, some of the insiders and early adopters are selling some of their stakes in the underlying security. But nonetheless, I think the valuation argument by Barrett makes some sense. If you look at the aspects of the analyst consensus, the average target on the name is about 161, which effectively is nearly double where we're at right now. A high-end up target is $280, low around 75. So we're actually near the low of the target range for the analysts.
Randy?
Is that if you look at the market capitalization of Circle, around $19 billion, as well as trailing sales around 2.4. It's trading on 9 times trailing sales, but the estimates for 2026 are 3.3 billion. So from a price to sales standpoint, one would make the case, or could make the case, that this name is considerably cheap, as well as the fact that going into 2026, they're expected to earn around $1.81 per share, which places the earnings multiple around 63 times earnings.
Okay, so it's interesting, this view from Barrett, because at the same time you have Mizuho out with a different perspective today, and they say, quote, in our view, Circle is likely to see downward revisions to consensus estimates over the coming years amid declining rates, less stellar proliferation than many are hoping for of its USDC stablecoin. So it's a very different perspective, and they've got an underperform rating on this, and they've lowered their price target to 70 from 84. So you've got different, very conflicting viewpoints out there on this one. George, final thought?
Yes, and that's the thing. If you look at the range, the variance from low to high, in terms of the rankings, they are quite wide. As you mentioned, 70 on the low, but 280 on the high side. So that gives me an idea, or you can make the case that there's contextually some challenges in visibility in the adoption of stable coins, more ubiquitous natures, especially with the major commercial banks, depository institutions, which still use, from a payment processing standpoint, the traditional SWIFT system. So that's something you got to keep in mind. But irrespective of that, there are some balanced valuations around that 160 at the midpoint, but you're also going to see the variance quite wide because of the uncertainty around the crypto markets right now.
All right, thank you, George. That's George Sillis, senior markets correspondent. Excuse me, tongue twister there, George. Over weekend. Let's get Tom and Kevin back in here. So, Tom, you've got the example trade in Circle. What's the approach that you're taking?
Boom, baby.
Yeah, stablecoins becoming more mainstream, right, in the financial industry. And you mentioned, the upgrade today from Baird. Just yesterday, JP Morgan double upgraded this stock from sell to buy, or overweight. So. Look at this. The technicals are reflective of oversold. The RSI about 27, so that relative strength index below the 30 level, so considered oversold. I mean, this stock hit $298 about a few weeks after its IPO. IPO price was 31. It opened up at 69. So it's been a falling knife at this point. But like George said, we're getting past that where early investors were able to sell some of their shares. So maybe that's going to right the ship on this one. So I looked at a strategy that takes advantage of maybe some upside here if you think that circle is going to rebound here, and being directional about it, where I'm giving myself some flexibility as far as when I can or when I have to get out of this particular trade. So going out to the December 19th, the monthly options, 35 days to expiration, so giving myself plenty of time, 5 weeks in this position. Buy the slightly in the money 80 strike call, got the higher delta, it's going to react more like the stock. Then against it to offset some costs on this bullish call purchase, sell the 100 strike call. So a bullish $20 wide, call vertical to the upside. You're going to pay roughly about a $6.70 debit on that. It's trading closer to $6.10, so you can get a little bit cheaper because the stock has pulled back from when I was looking at it earlier. If you pay $6.70 debit or $6.10 debit on that, that's going to be your risk. So about $650 roughly thereabouts. And if you pay that $6.10 for this or $6.70, it takes your break even up to $86.70. On a percentage basis, it's not that big of a move. But Kevin, on something like this, I think it's key when a stock looks oversold. It doesn't mean it's going to rebound right away. That you give yourself maybe some duration on this
3-day rule.
Yeah, you've given yourself duration. Your break even is the long strike, the 80 strike, plus whatever debit you paid for this spread. So if you paid $6.50, it's $86.50.
How dare you?
The highest you can go, $20. So you're looking for some type of a move. You got to have a move on a vertical spread like this, and you're looking for something that could be as much as a triple if you're right, Tom.
Yep, that break even, just about $3 above the current share price on a percentage basis. Not that big of a move, but Diane, on this type of trade, say I get that move to $90 or $95 ahead of expiration. As long as the market's open, you can maybe start parsing this or closing a portion or all of it ahead of expiration.
All right, well, good stuff there. That's going to do it for us today on Fast Market. I'm Diane King Hall, alongside Kevin Hayes and Tom White. Download the Schwab Network app. It is in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around. You've got Next Gen Investing with Alex Coffey and Jenny Horn coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere,
free.
I'll be back.
SchwabNetwork.com.
I'm Nicole Pedalini's at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, to make sense of these markets today, we've seen actually a pretty choppy session, but right now we are at least higher in 3 of our 4 major averages. The only laggard is the Dow, which feels honestly very random, but we've seen some mixed earnings this week. It's been a quieter week on the earnings front, as well as economic data, which is expected to, of course, ramp back up as we now have an open government finally after 43 days. But tech weakness has, I think, really been the biggest theme we've seen this week, as names like NVIDIA, I mean, all the Mag 7 with the exception of Apple, I believe, and Microsoft are set to close this week now lower.
Okay. There's a lot of ways that we could go with this, right? First off, let's just take a second and acknowledge how impressive this intraday turnaround's been, led by some of the most important parts of the market within technology. But you could look at the fact that, you know, earlier when we were on the panel this morning, Jenny, only 10% of the NASDAQ names were higher. It's now 52% of the NASDAQ names in the NASDAQ 100. But this chart that we got up, this 1 day, 1 minute of NVIDIA, yeah, the stock's come down quite a bit in just the last day, but intraday, going back to this morning, we're looking at a stock that was trading around 180. It's now basically 90. That's $250 billion intraday swing. That's the story. I don't want to oversimplify it, but we've talked about the importance of NVIDIA, and the reason so much of our analysis begins here is just the sheer size of this company, and if it's moving that much in just a few hours, it can explain why the market went from being on the ropes to carving out a pretty nice end of the week.
Yeah, actually, as we do check in on like week-to-date performances now, we do see the S&P is expecting to close out with a modest, but still 0.3%, 0.4% nearly gain. The Dow also expecting about a 0.6% gain. The Russell 2000 is actually our laggard of the week, down about 1.6%. And the NASDAQ also about 0.1% gain now on a week-to-day basis. So 3 of our 4 major averages are, at least as it stands right now, pacing to close out higher, which feels honestly kind of crazy considering the road it took to get here, of course.
Yeah, look, there's still time left in the day. I guess that's the thing, is I don't want to be the mush here that sends the market back lower. We still got 3 hours left in the session. The market is still on balance, going to be lower on the week. It's still going to be off its highs for a lot of these stocks. But you look at it and you say, it looked like it was going to be a pretty dicey open. It looked like we might be, reeling into the weekend here, and that could set up a very, very different marketplace, next week. But you look at volatility, still up a little bit on the session, but it's come down to 20.3 for the VIX. It was closer to 22.23 this morning. There's still a lot. There's still fear. What's up? There's still fear. There's still a chance that this market could turn back around. We're not out of the woods, but at least we slowed down the pace of the drop. And sometimes that's the best thing you can have happen if you're a market bull, is just to see it disrupt a little bit. Because the biggest risk when a market is kind of as extended as this one is you take the elevator down.
You do take the elevator down, and you're right. That would definitely, I think, be a great way to summarize what we've seen this week, because it, has not felt like a winning week by any means, but also following last week's weakness, a bit more steadiness in this market, I think, is definitely welcome. And again, it hasn't felt steady, but we're closing things out on a more perhaps steady note. But to Alex's point, a lot of time left in this session today, and of course in this week. But we'll get to our top movers of the day at the top of our show today. We will also be discussing Lowe's and Home Depot for our Chartmaster today, as they both have earnings next week. Home Depot first, followed by then Lowe's. We will also dive into, of course, the week that was for all things NVIDIA, as we're pacing to close out with some losses here on a week-to-date basis for now the second straight week for NVIDIA, which is unprecedented for the real barometer of our overall market health. But then we'll discuss holiday shopping expectations, as well as closing things out with under 30 today, as Under Armour and Steph Curry are breaking up. So we'll talk more about that fun story later on in our show.
Yeah, we'll ultimately see what that looks like. There is market impact for Under Armour, but it just seems like Under Armour, and we'll talk more about this with George, has slowly but surely kind of lost some of that brand relevance. It like peaked out in like the mid-2010s. You had Tom Brady, you had Jordan Spieth, you had Steph Curry. I don't know what they have now, so looking forward to that. Let's talk some, I guess, entertainment stocks. Is that how you could, different experiences within here too. But starting with Warner Brothers Discovery, so much infighting kind of right now within streaming, but I don't know if it seems like Warner Brothers Discovery has stayed out of that.
You know, it has, and actually, we'll be very curious to know what this company looks like, as it does right now prepares for several bids, as we're seeing per reports we got from the Wall Street Journal. So right now, seeing a bidding war that could upend the overall media conglomerate that could start as soon as next week. Paramount, Skydance, Comcast, and Netflix are already in their bids for the company. Again, according to these reports we got from the Wall Street Journal late Thursday. Now, the deadline for submitting non-binding first-round bids is November 20th, and Warner Brothers hopes to have this process completed by the end of the year, per these reports. So Paramount is an interested buyer in, of course, the entirety of Warner Brothers Discovery that has a market cap of roughly $55 billion as it stands, while Comcast and Netflix will be bidding for the studios and the streaming rights, which covers the rights to movies like Harry Potter, Batman, as well as the HBO Max streaming platform. So some of my very favorite viewing is really under that umbrella. But Warner Brothers, Paramount, and Netflix have not responded to these allegations. So again, it's just somewhat of one speculative report at this point. But we do know that media companies have been eyeing deals this year pretty substantially in a bid to beef up their streaming portfolios as legacy TV viewership continues to really hemorrhage. So continuing to see the shift in evolving media landscape, I do know there's like antitrust concerns I've heard from analysts regarding Paramount buying the entirety of Warner Brothers Discovery. So I'll be curious to know what this looks like, because right now it does feel like trying to guess where the direction of some of these bids go is as good as anyone's guess.
Yeah, so it's like while they're not getting along, there's also consolidation happening too. And I think some of that's going to need to happen. There's been so much disruption that's changed the economics of traditional TV. And outside of Netflix, every other company is trying to figure out how to really effectively monetize their streaming assets, at least enough to offset some of the drags of their legacy TV deceleration over the years. But I saw, potentially a $75 billion price tag for the Warner bid from Netflix. So it's going to be a massive, massive deal if it goes down that path. But clearly the market thinks that there's something to this when you look at the performance of WBD, really going back over the last a full quarter, 3 months.
Yeah, and I will be very curious. I know that we're diving into Netflix now next, but Netflix has said previously that they're not really interested in the strategy of acquiring. They're more interested in the strategy of boosting what they already, of course, offer from a content perspective. So this would be.
Does that change if HBO's studio is suddenly something you can take in-house? I think that there's always situations where it changes, but go ahead.
No, that's a really good point, because especially because a lot of their flagship programming, like I tend to think of like Friends moved from Netflix to HBO. We've seen a lot of like shift, obviously, as like the rights have changed. So I mean, this would not be a bad move for Netflix. It's just something that they've previously said they were against. So I'd be curious to see now Netflix with hopefully a more mature, more cash-rich position if they're interested in the M&A game.
Yeah, totally. I think they're in a position now. Also, the PSA on the split next week as well. So 10 for 1. Be on the lookout for that. When you wake up one day and Netflix is trading, 112, let's say, it didn't lose $900,000. It just split. But that's a story for next week. When you look at this particular name, though, I think the fact that it's turned into a earnings machine, a free cash flow machine, and built out some ad infrastructure really changes the equation as to can you even buy something.
Yeah, that is true. And it's also, I will say that ahead of this split, it's gotten relatively expensive, and now just further shifting its overall streaming dominance, as we did see reports from the New York Times that it's moving its video game strategy to focus on more popular titles like Pictionary, Boggle, Tetris, which will be playable on its app on TVs using phones as controllers. So the head of their gaming division said the number of companies that now have access to hundreds of millions of people, in their case, it's 700 million, on main entertainment screens at home are far less numerous, and we are one of the leaders. So trying to expand that presence. I will also say that I don't know if this has been around for like 100 years or I'm just naturally late. My Roku TV now has you be finally able to use your phone as a remote, which then makes me think, okay, this actually could be an interesting way to, continue to see more gaming. I think accessibility is huge because you're not going to game with your Roku remote. At least that's all I think
so
about
there's a couple things that I think one, it highlights who Netflix feels they're competing with, because it's really the all-important screen time and eye attention. And so they feel they're competing with video games, and they feel like they're competing with phones. So how do you eliminate that? You use the phone as the controller and you become the video game. So fascinating stuff. I do think if this Warner Brothers Discovery stuff goes down the path that some of these headlines suggest, again, I don't know, but streaming giant, streaming dominance suddenly buys another major streaming player. Is there going to be antitrust concerns? Perhaps.
Yeah, that's always, I think, a good question to be asked, and obviously we're well away from that, but something to consider here. But now to shift gears and talk Disney. Disney, of course, had its earnings yesterday morning, and we're seeing another day of pressure for Disney shares. As JP Morgan did say that this post-earnings sell-off, though, is actually overdone. They said they attribute the pullback to concerns over their park segment, but said the positives in their direct-to-consumer business are underappreciated at these current share levels. They had around 1.5 million net additions for Disney Plus in the quarter, which they said seemed to go unnoticed. And they increased actually their earnings estimates while maintaining an overweight rating on Disney with a $138 price target. So Wells, on the other hand, actually reduced its price target, 152 from 159, with an overweight rating, saying that park worries are back. Softer first quarter guidance is cascading into now these earnings revision fears, and they think that while the recent guidance track record suggests more upside than downside, they did say that right now they believe that execution will have to pave the way to see this solid upside. So two different ways of thinking, lots of analyst commentary on Disney in the last 24 hours. Jefferies, Rosenblatt, Wolfe Research were some that actually lowered their price target, but at the same time, Guggenheim did maintain its price target while Evercore actually raised it.
When you look at this, and I know the negotiation between Alphabet and Disney is like, in the grand scheme of the businesses, not the biggest story. But how much pressure is Disney suddenly under after this big drawdown post the earnings report? You look at Alphabet, yeah, there's been a drawdown with tech, but nice looking chart, still a massive company and a drop in the bucket. So I have to think that some of the pressure on Disney is starting to mount.
I do too, especially considering they're not really one of these names that's being thrown into the conversation with, of course, the reported bids for Warner Brothers Discovery, which also doesn't really help. But I'm not saying that that's their wheelhouse. They're a massive media conglomerate. But
I was reading too, it doesn't actually seem that the ESPN side of the thing is the sticking point. It sounds like it's more the ABC channel is really what, like, the traditional flagship ABC channel, and some of the issues is if you're going to put money on football on both channels, how can you value both as sports assets if you can watch it at the same time? So carriage costs, right? That's what we're talking about.
Carriage costs. If I have to miss Monday Night Football for the third week in a row, I'm going to be I'm not going to do anything. I'm going to be mad and nothing will change. But hey, I think still also part of the conversation of like, you have to be able to work out these deals. You can't have like broader consumers just mad at your service right now. That's also not good for your brand.
Yeah, it's not. And when you start thinking about the position, you're hurting your goodwill.
Mm-hmm.
And at some point, a consumer is going to have to pick a side. And for some, that's going to be Alphabet, and they're going to wait it out. And others are going to say, hey, you can't figure this out. I'm going to go to Hulu Live TV or Fubo or whatever it is. And so something to think about. Let's talk StubHub. I don't know if we talked StubHub before.
You know, StubHub is a relatively new name to the public markets. It did IPO back in September. So that's, I'm sure, why we haven't discussed this at length yet. But taking it on the chin a bit here today, we are down 24% on the session on an earnings miss and not giving any guidance. I think that really is your key takeaway here. Revenue did rise about 8% year over year. That figure actually did beat consensus. Adjusted EBITDA also marked a 21% improvement. Net losses, though, stood at around $1.3 billion versus just $33 million a year ago, driven by the $1.4 billion IPO-related stock-based compensation change. So that can at least speak to like the massive earnings miss or the lack of earnings in this quarter. But more important than that, no fourth quarter guidance was given. Management did cite the unpredictable event timing and a long-term approach. And large GAAP losses are really overshadowing any major revenue beat. Now, gross merchandise sales, which does represent the total dollar value paid by ticket buyers, that was actually up about 11% year over year to $2.4 billion. And so many said this was due to the tough comparisons, as results were boosted a year ago by the ever-discussed, we're still talking about it years later, Taylor Swift Eras Tour, which then, without that impact, we actually saw their GMS rise about 24% year over year. So that's, I think, interesting, a real impact from the Eras Tour.
Yeah, no doubt, but you look at the performance, we've talked so much about the successful IPOs. This is not one so far. I mean, the stock's basically lost 50% of its value from where it began. So something to monitor is perhaps some of the more risky side of things. IPOs, Bitcoin, tech stocks, momentum stocks are starting to underperform here.
They are, and in this name, we're not seeing that same appetite for some of these new entries into the public market, which I was so excited about. All things, finally IPOs, but haven't really seen some of these names at least fare as well in this current market environment. Now, we will leave it there for the top of our show today. But coming up next, it's time to dive into the charts. We're joined by our chart masters to break down some example trades and key technical levels in both Home Depot as well as Lowe's into their earnings events next week.
Perfect bounce off the 200 up to the 50 and the 63. Scalping. Bobo's back. Doo-doo. Bobo's back. Oh my.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing
Technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
We're experiencing technical difficulties.
Or bear, you want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange.
Bobo's back.
Only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the technicals with our chart master, Rick Ducat, on two names, both very much in the same world, home improvement, Lowe's and Home Depot, which both have earnings next week. So both names actually looking very similar on a year-to-date basis and not in super positive ways. We're down about 6% in Home Depot and Lowe's down about now 7% on the year. But walk us through these charts and if there are any key differences or similarities, of course, as there's
Jay was in a green dress.
different sized companies.
So similar that they're often uses the textbook example for
Falling wedge.
So closely related, so correlated.
What is this?
Definitely there are some distinct differences as well. If we were to backtrack a little bit and look
Rick,
here, we can see that
what
we
is it?
established an important low at this point at our light
Home
green
Depot.
line around
This looks
345.
interesting.
We had our tariff news shock event here that shook things up a little bit, but things quickly recovered and we found support around that same level once more. So that's our kind of very important low point here that we are getting precariously closer to day by day, it seems like here. But another important low here near 352.46, another low point during our previous rally. More recently now, we can see that price has traveled within the confines of this downward sloping trend line here, connecting these highs, subsequently lower highs. You could draw an accompanying boundary line across these lows to give you a falling wedge type shape. Typically, it's
falling wedge,
a little
yes.
more bullish, but you know, really it can go either way. What you'd be looking for if you were feeling more bullish about this setup here would be a push beyond that trend line and a push beyond these recent relative highs near around 376. That would potentially open the door to retesting these other more important older highs near about 394. So if we were to look at some of our other studies, when we look at our moving averages here, our yellow 21-day EMA has fallen through its slower moving counterparts here, our orange 63-day and purple 252-day EMAs. So in and of itself, this is not necessarily the greatest trading signal due to the lagging nature of these types of indicators.
Now mine will look
but it's an easy visual cue of the idea that
Mine might look a little bit different than his.
Accelerating to the downside here. So 377.57 is where that yellow 21-day EMA comes again for potential resistance. We are on the verge of crossing below our oversold area on our well, but as we have earnings,
Mine definitely looks different than his.
Terribly much of that, other than to note that momentum has been trending downward for quite a while now. We can also see when we look at our volume profile study, the important volume area is right
We didn't
around
break
here,
it.
near 370 or so. That's around where our point of control comes in, our thick red line that denotes the heaviest trading area of all. We have fallen below that mark, but we have not yet slipped into these very light volume.
347's a strong buy.
360, things really start to thin out. Our -1 standard deviation channel.
We've got two supports. Double bottom.
That could be a supportive area to watch out for as well.
Yeah, and so Home Depot will have a lot to prove as they've been an underperformer this year. They also, I think, give a great read on some of like the broader
356.24
for said, as well as just, you know, the overall discretionary spend, because are consumers able to fix up their homes? Are we seeing big ticket purchases? Great read on all of that.
This is a beautiful strong buy here though, 346.
To trade this chain for example purposes, Alex, what's your thinking?
Yeah, when you start thinking about both Home Depot and Lowe's, we'll talk Lowe's next, these stocks are a lot alike in many ways. So looking at a neutral to bullish strategy, selling a put vertical, acknowledging that earnings are next week for these companies, and that's going to perhaps add some volatility to the mix. So selling some of that volatility in, not next week's expiration, but actually the November 28th expiration, Jenny. And sometimes the reason being is, if you're looking at some of these technical levels, perhaps 350 could act as a support level, and you wanted to go there as we have this 350, 345, perhaps you need to go out a little bit further in time to get a credit that you feel is worth doing. So in this case, that's what we had to do. $1.25 credit, quarter the width of the strikes, 3-to-1 risk reward. You risk 375, chance to make 125 with a 348.75 break even. So asking this stock just to hold on, but you do got a little bit of cushion over the next couple of weeks if it does go down post earnings.
Okay, now to look at its counterpart, of course, that being Lowe's, which is also taking a page from Home Depot, really focused more on that pro business and trying to expand some of its more professional, like, fix-it-up offerings, which I will say, love both of these companies, I'm a frequent visitor of both companies, but Lowe's here is a bit lower on the session by about 1.3% and also down, again, about 7% this year. So are we seeing some similarities to Home Depot's charts? I mean, do these names trade in tandem with one another?
Yeah, some definite similarities, a similar type of trajectory here for the most part. The lows that we encountered earlier were a little bit different here. So we did have our absolute low points for the year during that tariff news shock. Then we recovered to a similar level, 210, a bit above that 206.39 absolute low point here. But that's around where we held on a second time, and then we did not actually test that level during the last decline there that we saw. Eventually, price did break out through this upper level near 232, an old gap point, and subsequent resistance point. From there, we have formed a similar falling wedge type of shape here after we hit these highs around 275 and connected these subsequent lower highs. Now we are near the lower end of that pattern here. We can see that that would open the door then to 221.76, which was our low point here. That could be a supportive area to watch out for if things do not go well. So when we see our other studies here, moving averages are a fairly similar picture here. Our faster 21-day crossing below its slower moving counterparts there, lining up fairly closely as well with our trend line. So around 237, 238 would be the first breakout area in this case. We have our moving averages to work our way through here between 237 to 242, and then this high point from our small range here, 246. If you were to look back even further, that was another gap point here and another high point during a decline as well. RSI, similar picture, declining, momentum softening up a little bit, but we have earnings, which is pretty common situation here. Our volume profile study is actually a significantly different picture in this case. Our point of control is just below where we are now. That comes in around 225, 226. That is a key area for the bulls to hold on to as a foothold. If we get below that green line we mentioned earlier near 222, volume really starts to thin out there. To the upside, our
we got a double bottom
around 233 or so. That would be then
or the VWAP on the /ES.
Okay, Lowe's, again, a name that has seen some weakness and a great read on overall discretionary spend. So these will be two critical reports to watch next week as we do get a slew of retail, Walmart and Target, also notable names reporting next week. But appreciate it to Rick Dupat, our chart master, for always bringing the technical help. And now as we do think through trading Lowe's here, again, comparable to Home Depot, but have seen some different reactions to its earnings as of late.
But the same enough looking charts, the same enough types of stocks that it was only fitting to look at the same type of example trade. So Rick talked about 225, 222 is kind of critical line in the sand support zones. Looking just below that at the 220, 215 short put vertical, and the following week's expiration again. So the November 28th cycle, very similar idea here. $5 wide spread, $1.25 credit, risk 375, Jenny a chance to make 125. Looking for Lowe's to make it through earnings, stabilize, and perhaps hold on to at least that 220 mark going over the next couple weeks. 218.75 would be the break even. But these stocks tend to move together. There have been differences to your point. But if you make it through both the earnings, they're both stabilized, perhaps a chance to have both of these examples work out as they are enough alike that they tend to move in tandem.
And of course, a bit of duration on the back of this example trade, so not necessarily an earnings pure play, but I mean, you'd be hoping for some earnings movement, of course. But we'll leave it there for Chartmaster today. Now, coming up next, time to discuss the week that was for NVIDIA. NVIDIA has actually done a great job of erasing some of its earlier losses as we're now up just over 1%.
for instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time to discuss the week that was for Nvidia. As now we're actually
SPX had bounced off the double bottom.
With today's move, we are erasing some of the earlier losses of the session. So joining us now is Marley Caden, host for the Schwab Network, to give us some more insight on the week that was. And I even forgot that we have earnings next week on Wednesday, of course. That's really the key catalyst of like the entire market.
Yes, we do, baby.
It will be. I mean, it will be the key catalyst of the entire, unless I shouldn't say that. We're split. I need to knock out something.
I know, something crazy will happen
here, right? Yes, but they have their earnings coming off of a week of pullback, but like you said, some of the action we're seeing today in advance of their earnings, there is something behind it, some sell-side commentary behind it, some price target increases we'll talk about in a second. But we are now more than 1% higher, which has taken them now on the week about 0.5% higher. So they are in positive territory ahead of their earnings. As far as the earnings are expected, they're looking at $1.23 per share. Revenues expected to be $54.59 billion. That would be up more than 55% from the year-ago quarter. So they are looking for really big growth here from Nvidia.
Now what the heck?
Now,
It ain't what I looked at.
Pullback that with all these AI names, Nvidia obviously taking a big hit. Yesterday we saw them fall about more than 3.5%. We had some worries that economic data might not come out, that the Fed might not cut rates, and obviously these concerns about the AI bubble, and that really caused drawdown on the tech stocks. We've seen Nvidia stock consolidate several times in the
Something
past
ain't
year.
right about that.
Most recently, 27-day flat base, it broke out on September 22nd, but it has managed to stay mostly above its 10-week moving average. But still up on the year. They're still performing well despite all this, up more than 40%. And as you mentioned, there are some really lofty expectations here for Nvidia. So when they report, if the numbers are great and the guidance is great and everything is great, we could see a potential monster move to the upside, not just for Nvidia, but we know when Nvidia moves, the market moves, the whole market will move with it. Or if we see anything that the street isn't happy with, we certainly could see that move to the downside. But as we're looking at analyst commentary going into their earnings, they have had some revisions. They revised it because CPI for the quarter has been revised up about 1/3% higher over the last 30 days, which is a bullish signal. Wells Fargo also raising its price target today to 265 from 220. They've got an overweight rating. Morgan Stanley raising their price target to 220 from 210. And Oppenheimer yesterday raising theirs all the way up to 265. So all kind of citing that they see a lot of upside ahead of the quarterly results. They're expecting some really strong positive numbers. Most of the upside they're citing is
Oh, I know why it's not showing.
in their price target adjustments, but none of them say that they have low expectations for
No, I know why I
Same
couldn't
sense to me,
understand
I was
it.
just looking at back at the last several quarters over the last couple of years in terms of the actual reaction in price. because it's still in our minds, guys, those monster moves of 20+% of a couple years ago. But the reality is, over the last 5 quarters, the biggest upside reaction was 2 quarters ago with 3.25%. And you have to go back 6 quarters to have a 9.3% response to the upside. And then I looked at the performance. You know what goes along with that? Decelerating revenue growth. That's set to change this quarter. Now, not by a lot, but that might change the math completely if we stabilize here in the mid-50s. I don't know if analysts, I'm sure they're weighing in. I'm sure there's excitement around this, but it just is a company that's gotten so big, guys, that it's essentially macro. It's a macro market event.
Yeah, absolutely, and I think they are weighing in. They're saying that we are going to see that acceleration again because of these Blackwell chips. That seems to be what's driving the Blackwell architecture. And then obviously these large-scale AI compute deals are major growth drivers for them. So it will be very interesting to see that that is the expectation, despite the historical standard, while they still
A little bitty candle pulled back, not much at all, and the thing drops
it will be interesting to see what happens if it does
40 bucks.
Because even if the numbers are good, we have seen many times this earnings
NVIDIA.
good is not good enough.
And that's sort of, I think, my question.
Well, you're talking about NVIDIA, honey.
Is at what point can we start to see some of these companies moderate and it actually be a good thing? Like, I don't see a problem with the company not always posting. Right now, we're expecting top line to grow 50%+ from last year. I mean, we can't maintain these levels of growth. So at that point, I do wonder, like, at what point levels of growth will still be enough for the street? I guess that's the question everyone's asking, because all these names have become so highly scrutinized.
Yeah, this is an interesting one, right? Because how many companies, period, have revenue per quarter around $50 billion? And I can rhetorically answer, how many of them are growing at 50% plus? The answer is this is the only one. So you start looking at it, and it's truly unicorn-esque in the sense that it's doing things and it's growing at a pace that no company's really ever done. But to your point, is this a build-out boom, guys, or is this a sustainable long-term, at least 3 to 5 years long-term? And depending on the analysts that you talk to, it's expected to decelerate. But if you're still growing at 25% in 2027, like, that's still really impressive.
That's exactly my point. I guess now these earnings events, I feel like nothing will ever be good enough. Like, we have this insatiable appetite for NVIDIA to post like 60, 70% growth. It's just not going to be feasible, I think, for the foreseeable future. But all that to be said, the difficult task is thinking through trading this name. And of course, just for example purposes, but there will be, I'm sure, a lot of extra eyeballs on NVIDIA next week.
There's always eyeballs on NVIDIA, as we know, but when you look at this stock, I mean, what is one thing
165 all of a sudden.
Earnings to limit some of that risk is use a risk-defined options trade when you're looking to trade around these events. And so that's what we looked at here. It's going to look a lot like what we looked at in Home Depot, a lot like what we looked at in Lowe's, selling a put vertical. But in this case, just going to next week's expiration. What I talked about at the top of the show was this stock, tested around 180 today. It also tested around that level last Friday. It was able to hold on both times. So if that 180 level continues to be support, even if the stock does move lower, perhaps the 180, 175 short put vertical could be an example trade that works out regardless of whatever the earnings response is. And so 125 max gain, 375 max loss, 178.75 the break even. Looking for, again, same word, stability post earnings, guys.
Stability would be nice, and I've always said that neutral is also still like a great stance to take, because we've actually seen fairly muted reactions for NVIDIA's earnings as of late. Muted feel like a win in this market environment, so we will be watching, of course, those numbers as they report, but that's not until next Wednesday after the closing bell. But appreciate it to Marley Caden for helping us break down some of the activity we've seen over the course of into that earnings event next week for NVIDIA. And that'll do it for FOMO today. Now, coming up next, we will discuss some broader trends we're seeing in holiday shopping, as we're seeing a major C-suite change at Walmart, as well as what we're to expect now.
We're coming down to a triple bottom, Randy. Major support level. I'm looking at the 67, 70s. We got a hold here. Nope. Oh yeah, this is going to be a good support off the megaphone. Randy, megaphone top.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. It's time to discuss a breaking news headline we got this morning, actually, from Walmart regarding their CEO, Doug McMillon, who will be retiring at the end of this year. So joining us now is Diane King Hall, host of Morning Movers, for some more insight on the story. So I saw you all cover this morning on Morning Movers, Diane, and curious your thoughts, because I know that the company has now said this was planned. This is not like a dramatic exit by any means, but definitely causes some uncertainty ahead of their earnings next week.
Yeah, there were questions. There have been questions swirling at times over the past few years about Doug McMillon and when he would retire. And now it's official. They put out the statement this morning that Doug McMillon will be retiring effective January 31st. So essentially that's the end of their fiscal year. Hence the timing of the change. John Furner will take over the top spot. He'll begin his tenure beginning February 1st. And he is an insider, so he's worked his way up the ranks from this company starting in the 90s as an hourly associate back then. So it shows that they are trying to create a seamless transition. He's currently at the head of the U.S. operations of the company, so he will succeed on the fiscal year shift. Initially, the stock sold off more on the news. Right now,
Prepare ye in the name of the Lord. 673368. I think after this trade, I'm going to go back and lay on my bed for a second. Been watching all these chicks murdering their husband here lately. Okay, we're about there. Jimmy's going to start the position. 6770s. Here it is. Here it is. Okay. I think you know what to do. The 6770s at 160. Come on, bitch. This has to hold. It's got to hold here or it'll drop a lot more. You hear me, Randy? I mean, we're in that time of day where you got to be real careful. And it is Friday. This ain't gonna work. Better turn around.
Okie-doke.
I hope that WD-40 this weekend helps my chair, because I really don't want to go out and buy a new one right yet. Not until I move. $170. $190, baby. $215. Dashing through the snow. I made $50 a contract. Let me know when you get out, Randy. $220. $225, baby. You're waiting for the 63. How about the 50? Because I'm a chicken shit. I'm going to take profit. $245. There's $250 right there. I mean, Jimmy, you're up $90 a contract. Have you ever thought about selling? Hell yeah. $285. There it is. Woo! For I'm a grand fellow, bee. Woo, Randy. Woo. $340. Okay. From Washboardjim. All out. Boom, boom. Do you not know who I am? Does anybody know who I am? $370? You bitch. $380. No. $4. No. 460. Oh God. Panic attack. Oh. 480. Who's that young man crying behind the mic? Damn it. Damn it. Still an A play. It was a risky trade, wasn't it? A great call. Called in way in advance. So let's talk about this trade, YouTubers. I'm going to show you what I saw and why I waited. So you remember at the beginning of the day when I called the megaphone? Do you remember this call right here? Then we had the 3 black crows and the 3 white soldiers. This resistance line right here. And that support line. That's called an expansion pattern. It's called a megaphone. And once we broke out of that megaphone, the top of that expansion pattern becomes a resistance level, which now becomes a support once you broke it. You see, we pulled back here, and boom, we retested that previous resistance. So you follow that all the way up, and look where we stopped at. Hello? Anybody in there? Unbelievable. Then it runs all the way up to the 200. I mean, that trade right there, 490 from 280, that's 210 bucks times 5 contracts. George. Hope you're taking notes, YouTube. $160. No, it's more than that. 160 to 490. That's 300 and oh shit. Panic attack. That even makes it worse. No. No. Oh gosh. Do I have any WD-40 in the kit in here? This really sucks. Ugh. Cuban chili. Woo. Oh boy. Oh boy. Oh boy. Netflix planned stock flip will be forward splitting their stock on the 17th. I can't get to it. Hello, my name's Washboardjim. Let me redo this. Hello, my name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And right now I want to talk about a trade I just called out that I think would be a great idea if you ever come across it. And it's called catching the stock off the resistance level of a megaphone pattern. So we're going to walk you right through it. This is the chart today. I'm going to magnify this up. So this morning I called out this trade. We had 3 black crows with a hammer, and we took that trade and run it on up. Then it consolidated, and we had another call right here, 3 black crows with 3 white soldiers. Then at this time it started to form what you call a megaphone pattern. That's an expansion pattern, where you have higher highs and lower lows. It's like a megaphone, and that creates a support level and a resistance level. And then one of the guys in the room called another 3 black crows right here with a tweezer bottom with 3 white soldiers, and we took that trade. And the sucker run all the way up to $3,000 from there. So as we broke out, we started to pull back some. And I'm telling the room that this old resistance level could become a support level. We thought we were going to pull back here, but we bounced up off the 200 EMA and went ahead and run it on back up. Then we bounced off the 50. I'm calling out these trades off these moving averages. That's part of my strategy. Chart patterns, which is the megaphone. chart pattern, which means candlestick patterns. 3 black crows, 3 white soldiers, and then we have what you call the moving averages, where each moving averages becomes a support level or a resistance level. And I have these down to a fine art in about any time frame that you want to use. The interesting thing about trading the stock market is when you're trading it, you could trade it in any different way. Everybody has a strategy. I can make 20 strategies out of and I'm just using one in one time frame. I could use different strategies in different time frames with my moving averages and my chart patterns, but I see more chart patterns on the 1 minute than I will on any other time frame that's out there, so I can make 3 to 4 times the amount of trades that a person can make if they used a 10-minute or a 15-minute. The bigger the time frame, the longer the swing. So let's go ahead and magnify this up to where we had, so we were calling this pullback out, and I'm catching these bottoms off these moving averages and off my support lines. And all of a sudden, I said if we didn't hold this here support line right here, that we could fall back and hit the top of that megaphone. And there's that megaphone right there, and you follow that resistance line on up, and that's where I took it right off the bat. I didn't hesitate one bit. I jumped right in the trade. I got as cheap as I could at 160, and it flirted around a little bit, dipped down a little bit, not much, 150 I think, and then it came back, and then all of a sudden it started taking off. And by the time we hit the 63, I took and sold some of my contracts. And then I sold some more once we broke it. And then it ran all the way up to $4.90. So I got in at 160, and I have 5 contracts. That's around $1,600 in just less than a few minutes. Let me see, I was in it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 minutes. Could have made $1,500, $1,600 on that trade for just 5 contracts at 160. But I sold it early at 63 and a little bit before that. Nice trade, I got to admit. So that's called the megaphone pattern. How to play the resistance level on top of the megaphone as it pulls back. What becomes resistance now becomes support. This is, and also an update, we got planned stock split of Netflix. We'll be forward splitting their stock prior to the market opening on November 17 of 2025. That's a 10-for-1 stock split. So I'd be watching this one here if you want to go long in a trade. Sometimes you want to give it a couple days. You could probably scalp it on Monday if it ain't already up by the time the bell rings. But I'd be looking to go in this thing long. I don't really particularly like Netflix myself because I don't watch TV. I have no interest in the stock, but I know the fat cats love it, and they always talk about it. It's like, I just don't see. Like I said, I'm not too interested in it, but I might grab 50 shares of it and hold on to it for another 5 years and see what happens. So that's Netflix, NFLX. We have a 10-to-1 stock split on the 17th, Monday morning. And I wish everybody a great weekend. Again, I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Whoa.
when I think about the power part of the story, you know, often we were thinking that people run out of money. Now they're just sort of passing around, I don't know if it's, you know, sort of theoretical money or whatever it is, at the same time, right? Because it's not like venture capitalists used to give the money and expect a return on investment. It's very different the way they're sort of doing this circular funding. But we thought that how much the next level of AI would cost billions and billions and all this.
Starting next week, I'll be taking donations for my vacation.
Oh, absolutely. The slowdown is because of power. And I've seen the memes where the circularity of finance and money is there. It is a little bit weird, but at the end of the day, the demand is real. Artificial intelligence is going to pervade our society from head to toe, and so this is a long-term trend. But the slowdown is a result of running out of power, getting data centers up and running, whether it's a retrofit format like what we do or a greenfield format. And you know, then when you throw in the tariffs and getting materials through borders, that makes it even more difficult and more variable. So it's certainly, the slowdown is really about getting it done, and the winners are going to be those who are able to execute.
And so, sorry. So tell me how you think that things should go.
Well, I think in terms of how the megawatts that are developed should be really to companies who have an edge and have experience in building data centers. There are a lot of people who are just jumping on the bandwagon of this, which we strongly disagree with. Our team has been doing this for decades. They've been identifying facilities that are not even marketed as data centers, and they are able to identify them and retrofit them into tier 3 data centers, which is their appropriate classification for AI labs. So I think the winners are going to be those who say what they're going to do.
A lot of people just play that megaphone inside the megaphone.
Much better because you can get things
You know,
done
there's not too many illustrations on here talking about
scratch. And so that is really
it coming back down and hitting the top of that support level.
And how things should be done. It should be done with seasoned operators.
I mean, we think about what you're doing at White Fiber and how, you know, you're stepping in to fill the gaps amid this capacity crunch. And I mean, CoreWeave is another name that comes to mind. When you think about now being public, does that help you to grow? How do you apply the funds?
And it's not always guaranteed either, because like I said, we're entering that time of day where it gets a little bit risky.
Yes, I mean, White Fiber is young, it's newly public, but the team has been developing HPC cloud and data center infrastructures for decades. We've become increasingly well known now for what we do. In fact, just the latest execution project that we did was for a client called Cerebras. We identified what was a mattress factory last February, and we retrofitted that and turned that into a tier 3 data center.
Man, it's just a lot of drawing on here.
We did that on time, on budget. Very rare in these days. And so that's the kind of execution, and that's why we're becoming extremely well known. The best kind of marketing is executing on your promises, particularly in the data center space. And that's why we've become extremely well known.
And you talked about now your capital is better used developing your own data centers. Tell me more about that and how
I was quite impressed with that trade,
take?
I have to admit.
It takes a lot of money to develop data centers. The most expensive thing, however, are mistakes. And that's why I kept on saying earlier, for people who are just jumping on the bandwagon, they're going to be making a very expensive mistakes trying to develop these data centers. But you know, since we've done this IPO, now that we have the capital, we are able to execute on a much larger scale than we were doing before. We're focused right now on this North Carolina flagship facility that has 99 megawatts associated with it. We're speaking to various parties. We're in fact about to close on one of 2 of the clients who are looking to develop on that particular flagship facility in North Carolina. So it's been really great stuff. All our problems are our first world, first class problems, but there's still problems nonetheless.
Yeah, and I know you have partnerships with Dell, and so you mentioned Cerebras, Supermicro, HP, and NVIDIA. In fact, all those NVIDIA GPUs deployed. Tell me more about that.
Yeah, we're a preferred partner to NVIDIA. Our relationship with NVIDIA goes back many years. There was a time similar to CoreWeave when CoreWeave used to be an Ethereum miner, so we were actually also doing Ethereum mining, and NVIDIA was involved in the development and manufacturing of Ethereum mining machines. And that goes way back many years ago. So we've had that relationship with NVIDIA for a long time. And then we've developed our own cloud business. NVIDIA was in the center of all that. So we were able to have a really friendly and warm conversation with NVIDIA, given the history between both companies. And then we've become one of their preferred partners of their preferred partner program. So yeah, we've been very happy. Our relationship with NVIDIA has done very well for us.
And after your quarterly report that came out yesterday, tell me a little bit about that. I know you posted a loss. Revenue has been on the rise. How did you feel about the latest quarter and the outlook?
Well, our expenses were mostly based on one-off expenses with respect to the IPO, but also we've developed a tech stack in which will help our cloud business. So we're trying to position our cloud business as performant and not just compete on price. And in order to do that, you need to invest a lot of money on software engineers. Software engineers these days are not cheap. But we're trying to build a durable business, because if you only compete on price, that's a race to the bottom, and that will end in tears. So we're performing on performance, and we had to invest a lot of money on technology. And also with respect to revenues, I mean, we really look forward to announcing a big contract that we have with North Carolina, our flagship facility. So stay tuned for that.
All right, Sam, great to see you. Sam Tabar, CEO, White Fiber. Great to see you, Sam. Thank you very much. A great conversation, important conversation as well. Coming up, Options Corner. Tom White is standing by, and he'll highlight unusual options activity from the day. How investors are looking to trade on the recent news of Pfizer, Alibaba, which has some breaking news, and Amazon. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down the different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Welcome to Schwab Network, where real-time market coverage means expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. Welcome back to the watch list. Time for options. We analyze the usual trades, options, trades, real trades. Tom White, host of Fast Market here on Schwab Network, combs through and finds these trades and explains them to us. Before we get to them, I'd love to just know your market thought here as we're wrapping up an extremely busy week. We've seen the NASDAQ sell off multiple times in the last month or so. But today, as usual, coming back, tell me a little bit more about the big picture in your opinion.
Yeah, I think if you take a look at it, it's about volatility, right? We're starting to see some volatility coming in different asset classes, whether it's the equity market, you see the range moving average level,
becomes a support level or a resistance level. And I have these down to a fine art. In about any time frame that you want to use. The interesting thing about trading the stock market is when you're trading it, you can trade it in any different way. Everybody has a strategy. I can make 20 strategies out of and I'm just using one in one time frame. I can use different strategies in different time frames.
Are coming in that we are going to get that December cut. And what does the market already have priced in? Well, they already had the 25 basis point cut priced in, and that's probably why you're seeing a little bit of consternation here with the equity markets. Now, let's take it all with a grain of salt, Nicole, because of the fact that the S&P 500 is still only down 2.5% from its all-time highs. The NASDAQ, a little rotation out of some of the big tech winners, down about 4% from those all-time highs that we saw just over a week ago. But the NASDAQ trying to break that 3-day losing streak here. The Dow is just a couple percent off of its all-time highs also. So, yeah, I don't think the panic button should be pushed at this point, but there's starting to become some headwinds here for the equity markets. I think we're going to get a lot of clarity on where the consumer is, right? Consumer's 2/3 of our economy at this point. Next week with earnings, we get Target, we get Lowe's, we get Home Depot, we get Walmart next week. So we're going to kind of get some more clarity on where the consumer is. Are they still comfortable spending at this point? Even though we've seen some weakening jobs data on that side of it. And a lot of the Fed speakers over the past
Debbie Downer
kind of highlighted the fact that inflation, while sitting the CPI on the last read that we got was sitting at about 3%, isn't coming down, and they're getting a little bit concerned about that and the impact from tariffs. Now, we did get some positive tariff news also today out of Switzerland, some other EU countries, which is going to probably be a bonus. But it was nice to see a little bit of calm when stocks opened up down over 1%.
All right. Well, thank you for all that. And of course, we will get all those retail earnings next week and NVIDIA, as you've noted throughout this whole week. So we'll have a lot to look forward to next week. Let's get to some of the stories here. Pfizer's had a choppy go of it, made a big bet recently on GLP-1s, but it went from $27, the recent high, now to $25. Tell me a little bit about the bearish trade you found.
Yeah, I think investors frustrated with Pfizer, their performance over the last couple of years. I mean, the stock's down about 5% so far in 2025, getting hit a little bit today. They did announce that they successfully completed their acquisition of Metsera, so maybe that will help them as far as the obesity drugs, the GLP-1 names kind of combating against Eli Lilly, Novo Nordisk. Remember, Pfizer tried to come out with their own GLP-1 or obesity weight loss drug, and that failed. It didn't meet a lot of their criteria, so they abandoned it. So this would actually help them.
Criteria.
Get rid of their stake in BioNTech. They're offering about 4.55 million shares of their ADRs that they have. So a little bit more optimism this week. It's up about 3% so far in November, but it still just seems to be kind of stuck at low valuation levels at this point. But we did see some unusual option activity in here, and this is on the put side. This could be a trader that's just hedging a long stock position, or it's just somebody speculating that, hey, the trouble's not going to end anytime soon here for Pfizer. Out in the December 19th monthly options, so 35 days to expiration, trader bought over 30,000 of the 24 strike puts, paid an average debit of just 34 cents on those puts. So the break even for this trader where they start to profit is below 23.66 over the next 5 weeks. That's about 6% below the current share price there in Pfizer, with put volume about double the normal daily average volume that we've seen over the last 5 trading sessions here in Pfizer.
Understood. Next up, we have Alibaba, and I actually saw some breaking news on Alibaba in the last hour or so. Tell me some thoughts here, and you've had a neutral to bearish trade.
Yeah, some news just came out about an hour and a half ago, and the stock was having actually a good day, good year, right? Stock's up over 80% so far in 2025, but down 20% now from those 4-year highs that we hit just last October. And they've got earnings coming up on the 25th of this month. So a little bit of a reversal. And this was based on some statements that came out of the White House National Security Memo, alleges that Alibaba has provided the Chinese military with technology support targeting U.S. interests, including access to customer data and AI-related services. This comes out of the Financial Times. The memo claims employees shared knowledge.
Come from the Times, don't believe it.
Software vulnerabilities with the People's Liberation Army in China, raising more concerns. Immediately, Alibaba came out and says that this leaked information that U.S. intelligence came out with is false, and they're trying to attempt to manipulate public opinion and malign Alibaba. So back and forth on that, but that's why the stock kind of turned around. They are trying to overhaul their main mobile app, AI app, to resemble OpenAI's ChatGPT. We all know that these Chinese companies sometimes copy a lot of technology, little copying going on there. But we did see some neutral to bearish activity, and this was in the morning before the stock turned around and started falling here, Nicole. This was out in the December 5th weekly option, so you're going to capture that earnings event on the 25th. The trader sold over 8,000 of the 170 strike calls in that option series, collected a credit of about $4.46 on those 8,000 contracts. So the break even where this trader starts to lose money is above 174.46 over the next 3 weeks. That's about 14% above the current share price in there. They also did buy out of a position that they had in the November 28th weekly 170 calls. So they bought those back, went out another week, extended duration on this. But this is a neutral to bearish stance. It could be a shareholder that owns a bunch of shares and they just want to offset some of the risks on it. Or it could be somebody speculating that, hey, Alibaba's got earnings, but the stock's not going to pop that much.
I know it had such good news for a while. It was running hot, and now we really see it turn around. Last but not least, we look at the Mag 7 name, Amazon. Some of your thoughts there. What is the bullish trade you found?
Yeah, the stock's pulled back about 8% from those all-time highs that we got earlier this month, and that was post-earnings. Really good earnings report on it. AWS sales rose over 20.2% growth year over year. That was above the quarter prior, which was only at 17.5% growth. So they're growing more on that front, advertising and through Amazon Prime Video, reaching about 315 million monthly active users. That's a bonus for them. That's actually over a $50 billion business a year for Amazon right now. So continuing to diversify their revenue streams in here. Stock's down a little bit today, but still up about 7% this year. But as I mentioned, it's pulled back pretty significantly from those recent all-time highs. We did see some bullish activity in here, and this was out in the November 21st monthly cycle that expires in just 7 days. Trader bought over 4,000 of the 242.5 strike calls. Paid an average debit of about $1.91 on those, so the break even where this trader starts to profit is above 244.41 over the next week. That's only about 3% above the current share price. And we might get some movement next week, Nicole, because you mentioned NVIDIA has earnings. A lot of the retailers that Amazon competes with have earnings. So it could be a volatile week, but this trader is taking a bullish stance here over the next 7 days.
And look, this heat
what's up?
really has changed colors. I mean, when you talk about Amazon, which still is in the red, but NVIDIA, Microsoft,
Hope this ain't spam, because you are being recorded right now.
I mean, so much in the green now.
Johnny, did you get that?
It was just a sea of red. All right, Tom White, thank you.
Yeah, I'm starting to get spam again.
And thank you for those 3 names.
Make sure you can locate where this is.
All right, coming up,
You got it?
we'll take a look at the big picture. We have some stock picks.
Thank you very much, Betty.
We'll be concerned about
We're going to issue a warrant for you tonight.
maybe potential rebounds and new highs. Conversation David Dietz is coming up.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. First of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading in Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We welcome in David Dietz, Chief Investment Strategist, Dietz Wealth Management Group. Great to see you, David. I haven't seen you in a while. How have you been feeling about the markets? We were just saying, even with all the recent volatility, the S&P is, 2.5% off the highs? Nothing to fret about just yet. What do you say?
Yeah, so great to be with you again, Nicole. So it's been a volatile week here, and I do think that the number one issue is investors reassessing the AI trade. And there's some good reasons why people are really coming to grips with whether there is a bubble, whether we've gone too far. You've got a blue chip name like Oracle, which has lost 1/3 of its value since August. That's not like Oracle. You know, you've got like Meta down nearly 20% in just the last month, and that's, I think, causing investors to say, hey, what's going on? And then, of course, you have Michael Burry at the start of the week saying he's shorting AI. You've got the leader of SoftBank saying he's sold out of NVIDIA completely. CoreWeave disappointed. And so I think a lot of people are starting to rethink how much capital expenditures are being made here? When will the payoff
The fundamental traders.
How will the payoff be? And so we've seen a lot of volatility here, but of course these stock.
The fundamental traders are all screwed up. They really are. Whatever you do, promise me you won't become a fundamental trader. Can you do that? Study technical analysis with Washboardjim, where he talks about chart patterns, moving averages, and being in the now. Just don't be a fundamental trader. Unless you're a bookworm or you want to trade like you were back in 1930.
Profits there and rebalancing. One of the problems, of course, is close to 40% of all the S&P 500 in terms of the market cap is focused in these top 10 big AI related
You got a problem with it, old man?
So if you take money off in an underweight, you do that at your peril in case, of course, the AI and tech stocks keep going. But again, to have so much allocated to such a small area of the market
is asinine. I know. And they've been saying this for almost a year now. And look what they've missed out on. I've heard this speech over and over and over and over and over and over, old man.
For them to be, and when you have everything so fully valued and expectations so high.
Oh my God!
I had a guest today say how Jensen Huang recently talked about data center revenue in the future will outpace the estimates. That sounded pretty positive, and I don't know if I didn't actually hear Jensen Huang say that, but that could mean something good for the earnings next week. But so goes NVIDIA, so goes the market next week.
Yeah, I think that's right. And of course, as much as I admire NVIDIA and Jensen Huang, I mean, they sell to the data centers their chips, of course. So they have a vested interest in, keeping the momentum up.
Make sure you don't spit your teeth out of your mouth, old man.
Their potential customers. What scares me is the epicenter, of course, of AI is OpenAI. And, they have, 20, 30 billion in terms of revenues, but the amount of spending is going into the hundreds of billions of dollars. And
you got a problem with that?
How ultimately will that debt, all those expenditures really be repaid and won and when? Of course, the longer they project out, the hazier it really gets. No one's got a crystal ball. If
I do.
everything is priced to perfection, that's when there could be some disappointment.
I got a crystal ball.
Let's get some of your picks here. I know you have Kraft Heinz. Why Kraft Heinz?
Anybody want to see my crystal ball?
Yes, it's just a cheap stock. I mean, I've been interested in it for a decade when Warren Buffett first got
Warren Buffett.
Of course, he's been very disappointed with that stock going down 50% since he's owned it. That does not include.
And he still owns it, don't he, you idiot?
But now you're having a situation where all the consumer staples companies are so out of fare. There's concerns about the strength of the
God,
consumer.
why'd you bring this old man on here?
Inflation in raw ingredients and so forth. And of course, when you have AI going gangbusters, why do you need processed food companies? But having said that, at this point, you got an 11% free cash flow yield. You got a 6.4% dividend. What are the wild cards here? The wild card is one, they're going to split up into two companies. That may unlock value. But I think the biggest wild card is Mr. Buffett still owns 27%.
Where's my crystal ball?
I don't think he can sell at this point with the stock
What
down.
is?
So maybe
Shut up.
Maybe some other activist comes in and takes over the company. Certainly, the cash flows.
I'm done with you.
Could be a very profitable investment for someone.
As I look into the crystal ball,
Over to energy. You're talking about SLB, formerly Schlumberger, as oil's
I see
sitting around
this.
$60 a barrel. Where do you think oil's headed, and why SLB?
Well, certainly, we're seeing that
It's a one of a kind.
is still out there. We saw that Ukraine.
There's only nothing. There might be 3 of them made in the world.
Installation in Russia that's pushed prices up. I think Iraq commandeered a boat
that's made just like that one.
Political risks are still there. Energy has done recently better.
It's for sale for $20,000 if you want it.
SLB is up 11% the last month when the S&P 500 is flat. Why do I like SLB?
But that's what I see in my crystal ball.
One of the best. in terms of oil field services. But what people are not seeing is that they're also a leader in the digital, the use of digital technology to extract more
Come down,
oil.
Jim.
They have a nice acquisition just happened with Champion X.
The old man didn't mean to piss you off.
12 times earnings. It
Well, he
used to
did
be
too.
well over 20 times earnings. So I think there's a bargain here, and it's starting to move up here over the last month.
I've been hearing that over and over and over and over.
Like a lot of them,
They're begging for this market pullback.
So it's down 46% year to date. So you certainly would be buying low, but it's part of the group with United Healthcare. And you've got these health insurance companies. Basically, it's the problem that a lot of insurance companies have from time to time, where the claims, the cost goes higher faster than the premiums that they've been charging. And of course, you know what they do there, then eventually the premiums start going back up. No one's going to go without it. Health insurance, Molina is a big player in terms of government insurance, whether that be Medicaid, Medicare, or the state market, the marketplaces run by the states and so forth. And right now, there's a bit of a mismatch. They should only make about $14 this year, but we see them ultimately going to $20 to $25 a share as they boost premiums up and investors come back to the health insurance area.
When we think about the big picture and what the Fed needs to worry about for the next meeting, you did talk about weakness in the labor market. In fact, you talked about it slowing and mentioned some of the layoffs. At the same time, are you worried about inflation? What do you think the Fed does? What do you think the Fed should do?
Yeah, so I think the Fed cuts. I think that's a minority opinion right now. Just today, it went from a coin toss to, around 40%, and a month ago it was about 95%. Here's the problem.
Randy's noticed the ascending triangle.
No data, and so we're all speculating as to what, in fact, the true unemployment rate is.
Triple
what the
tops.
true inflation rate is. People worry about what the Fed is likely to do, and stocks go up and down. I'm afraid that the Fed's going to be looking at the stock market to get a clue as
Oh,
to what's
God.
going on out there. At the end of the day,
Who brought this Debbie Downer on here?
Who back in September and earlier in the fall said
David
there would be
Downer.
another cut in December. They really haven't backed off that. There's been some other naysayers that have
Naysayer,
put
you're one of them.
marketplace as to what the Fed might do. But my best guess is,
Oh, God.
again, there is weakness.
I gotta
in,
walk away for a second. I
labor
can't take
market,
him.
Verizon laying off 20,000 people, things like that. And so I think they're going to err on the side of caution because of the risk to jobs, and that's going to be a more important factor than inflation, and not disappoint people during a key holiday season.
I think the 10-year bond yield at 4.14. We've been in somewhat of a range, and I say this.
No, I'm not watching the trade yet.
But I'd say over the last 2 weeks, the range was just below 4%.
I'm still high on myself from that last one. I gotta go pee and then I'll come back and get back in it. Get dialed in.
The shutdown has ended. Some of the worst case scenarios in terms of a real slowdown in the U.S. economy have been avoided. That's going to be a little bit more, put a little bit more demand for money in the system. You've seen the stock market basically do pretty well. And so therefore, that also is keeping a bid under the 10-year Treasury. So at the end of the day, I think that
The video is one to watch for next week.
Is a positive for the market. It's showing that the 10-year Treasury is not saying the big R word, the recession ahead of us.
Oh, God.
We do think that the unemployment is deteriorating a little bit. It's not falling off a cliff, and so therefore we're reasonably happy with where the 10-year Treasury is today.
And look, I saw your notes on tariffs. Basically, you like that the administration is focusing on affordability and working with Latin America, for example, to bring down prices for coffee and bananas, and whether or not there may be more tariffs that come down or get reduced or lowered. So, and also affordability on housing. I mean, they've even floated the idea of a 50-year mortgage. David Dietz will continue to talk in the future. Chief Investment Strategist, Dietz Wealth Management. Always great to see you, David. Thank you so much. Still ahead, we'll bring in our panel to discuss the booming data center build-out, AI. We'll be right back.
Sometimes,
you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management. Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I want to bring in our panel to talk about the data center build out. We just had a conversation with the CEO of WYFI, Sam Tabar, just talking about AI power scarcity. And that's what we're talking about here now with Mark Gibbons, CIO of Gibbons Capital Management, and Lisa Martin, Business Technology Strategist at Lisa Martin Media. Thank you both for being with us. Mark, we think about these hyperscalers, and Sam was saying that the slowdown, I know they're doing a lot of circular funding, he said the slowdown is the data center build out.
Yeah, you know, individual issues are going to come up with individual companies with these data centers. But as far as really large bottlenecks, you know, we aren't seeing too many. I think the largest bottleneck, you know, that we face really is power. But when you think about the development of power and the way our economy works, players will come in to, you know, adjust to that. So the data centers could become more efficient, or we maybe rely on a new source of power like nuclear. So as far as I'm concerned, I believe in the long run these issues will get addressed.
And also, Lisa, you were saying there are major players that are the winners. Which ones would you say are the winners?
You know, I think, great to see you, Nicole. I think some of the winners are really clear. We're seeing
It's breaking out. Oh gosh, I don't even want to look at these now.
Amazon, Google, Microsoft, Meta, they're
580,
all
that ain't
funding this
bad.
expansion. We're also seeing hardware suppliers like NVIDIA, one of our darlings. They're providing the essential AI accelerator chips. The primary winners so far are the companies that are really, ultimately, at the end of the day, Nicole, they're providing the core infrastructure and high-performance components. And really, we're really at the beginning of what could be a massive global infrastructure wave in AI and data centers.
There's no question their demand is there, but Lisa, are you concerned now about the build-out and doesn't catch up? So how and why does that slow us down?
Well, the scale of the investment is staggering. If you look at what JP Morgan estimates in terms of annual funding needs for data center AI infrastructure, they say this might reach by 2026 $700 billion. 2026 is around the corner. They say this will exceed $1.4 trillion by 2030. But the boom about the AI data center and funding, it's not just about tech companies. We need to kind of expand this. It's really about major capital markets. So the question of which markets will finance the boom is already shifting to how will financing be structured. And because the growth is so big, so is the risk. It's significant both in execution, construction, power, real estate, and in return, expectations.
And Mark, I know you were talking about delays, whether it's power constraints or even just construction delays. It seems so simplistic. Is that the problem?
Yeah, again, like I said, I really don't see that as a long-term problem. I do see it as a short-term problem. Sure, there's going to be delays. Could be construction delays. There could be problems with equipment as we build these out. But this is going to be a large, super cycle type of an event, and short-term problems with individual issues and individual companies can easily be addressed over time.
And what names do you like here, Mark? I mean, for the long term.
I say keep it simple. So, I like Meta, I like Microsoft, Google, Amazon. So I like the hyperscalers. I also like NVIDIA. There's no need to really complicate this. And we've got this recent pullback, this really pretty significant recent pullback. These are great opportunities to buy these great companies and ride this important wave of innovation.
And how do you feel about, both of you, about the U.S. versus China? NVIDIA has noted that not having the Blackwell chips going to China is problematic. At the same time, I heard that Jensen Huang was very positive about the data center revenue going forward. What are your thoughts, Lisa?
My thoughts, Nicole, are on the investor side in the U.S. They're rushing in because the sector, it's matured. Some of the things Mark said I completely agree with. We're seeing that financing models, they're moving to more sophisticated models. Returns, we're getting some clarity there. And next-gen designs like liquid cooling, high-density racks, they're promising higher long-term value. And if we add in global factors like sovereign AI mandates, data sovereignty rules, we have multiple regions really racing to build capacity. And I think the result, even with some of the things Mark talked about, power, construction challenges, 2025 is really shaped up to be another record year for data center developing from a financial perspective. And we'll only see that momentum carry us in and through 2026.
Yeah, and Mark, you noted the power. We think about utilities and nuclear power even, right?
Yeah, so obviously that's what I view as the main constraint here is power. There will be other issues, but I think power is the main one. But again, the way our economy works, right, we live in a capitalistic society. There will be players that come in, they'll make the data centers more efficient, they will find ways to deliver this power to these data centers.
What about real estate, Lisa? Is that something, another sort of idea here that we got to contend with?
We do, because it has been a challenge from a constraint standpoint. At the end of the day, even though power, as Mark said, real estate, those are constraints, we've seen investment in AI data centers simply booming. The physical build-out from a real estate perspective hasn't quite caught up because of the power limits, permits, construction, getting that specialized hardware in place. But the next steps really are, as we head into 2026, to ramp up infrastructure, complete construction, get these centers fully operational for the AI workloads that are no doubt coming down the pipe.
Lisa, next week we're going to hear from NVIDIA. You're constantly following these names. I mean, you're sort of breathing these names, these tech kind of hyperscalers, generally, for the most part, for all of our conversations. Can you expand some of your thoughts, whether it's a particular company or a trend you're seeing for 2026? Do you expect more records? Is there a particular name you're watching closely?
Besides NVIDIA, Nicole, it's the darling of the Mag 7, right? We're always watching it because it seems like at what we've seen trajectory-wise, NVIDIA can make no mistakes. I have a lot of friends that work for NVIDIA. I think we're seeing so much opportunity where companies like CoreWeave, Microsoft, they're OpenAI, they're partnering with NVIDIA because the momentum is there. I think the trajectory only shows us getting stronger, and that will help from a U.S., I think, China relations perspective, give us an edge.
And Mark, you talk about the tech boom, this revolution that will continue with all the CapEx spending. And you mentioned the names. You said keep it simple. The ones that are doing well continue to do well, right? You mentioned Microsoft, Google, NVIDIA, Amazon, Meta. What other names or sectors do you put in a portfolio that you think can work for 2026?
Well, you could look at different areas. You could look at software. So, there are security providers out there, CrowdStrike, Palo Alto. There's also power providers themselves. So, a name like, Quanta Services. But yeah, there's lots of ways to play it. There's even new names out there. Back to software, as Palantir is definitely a new name. Some people would argue higher price, but it does certainly have a long runway in front of it.
And we think about all the materials that are needed in the world of tech. A final thought, Lisa, as we give you the final word here.
I think what we've seen is that all these folks Mark and I are talking about, Amazon, Google, Microsoft, Meta, NVIDIA, they're all funding this expansion. NVIDIA is giving us this foundational layer of AI accelerator chips. The primary winners are going to be the companies that are providing the core infrastructure and the high performance components. So the ones that we mentioned as we go into 2026 are still the ones to watch.
All right, Mark Gibbons, CIO, Gibbons Capital Management, Lisa Martin, Business Technology Strategist, Lisa Martin Media. Thank you both for being with us. And thank you, friends, for being with me here on the watch list. We've seen the S&P 500 turn into the green. It's up 25 points now. The Dow is still lower, but energy, tech, utilities, real estate helping to lead the way. NVIDIA, Salesforce, Microsoft, Chevron, also winners here on Wall Street. Keep it right here. Market on Close is next.
Final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close.
The SPY's holding up from this morning's call. Right now we're at $4 on the SPX.
Opportunities don't stop when the market day ends. So
I'd wait for 67.56.
Access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures.
Almost set an alert right above it.
All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens.
As it happens.
24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Varnas, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Happy Friday. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Hayden, coming to you live from our Chicago headquarters.
And I'm Sam Varnas, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll be joined by the CEO of Extreme Networks to discuss the company's latest quarter and dive into what lies ahead for the company in 2026. In Options Corner, we'll check in on DoorDash, which is higher today despite a price target cut by the analysts. They still see a buying opportunity despite an over 25% decline from highs last month. And today's overlooked stock is Topgolf Callaway, after reports that the company is looking to sell its Topgolf unit to private equity. So George Sillers will break that down for us a little bit later on. But for now, Marley, take us through what you're watching today.
Yes, Sam, I'm watching a move in these memory stocks. We're seeing Micron Technology, one of the top performers on the S&P, moving higher alongside SanDisk after getting a boost from reports that Samsung is raising its chip prices. Reuters says that Samsung has significantly increased its memory chip prices amid worsening supply shortages, sending some of these memory names higher today. And Applied Materials is recovering after being under pressure following a better than expected earnings report. We'll talk through those numbers as well as their decline in China sales shortly. And NVIDIA also higher today following a series of price target hikes ahead of its earnings next week. We'll discuss why their bullish moves are helping despite this recent stock pullback and how analysts are looking at the company going into earnings. Before we get to all of that, though, let's take a look at the markets as we get closer to the close on this Friday to close out our week. We are mostly in positive territory here. The S&P 500 up 0.4%, 67.6407. On the NASDAQ, we're trading more than half a percent higher at 25,138.89 right now. The Dow is still under some pressure, down 1/3%, 47,296, and the Russell 2000 up 0.5% as well, 23.96 right now. The dollar trading at 99.21, just a little over a tenth higher. Gold, though, down on the day, 2.5% lower at $4,091. Crude oil trading higher, though, up more than 2%, 2.33% at $60.05 a barrel. And Bitcoin still under quite a bit of pressure, down 2.33% today at $95,835, under that very important mental round number of $100,000. Now, before we get to some of those top stories, I do want to check back in with Sam in New York and see what stories caught her eye today on the floor of the NYSE. Sam?
Well, Marley, watching the retail space today ahead of a big week of earnings. It's the end of an era over at Walmart. Shares in that company are moving lower today on an announcement that its CEO, Doug McMillon, will retire at the end of January after more than 10 years at the helm. John Furner will take his place after leading the US business since 2019. He joined the company in 1993. The retail giant is set to report earnings on Thursday, which will give us a health check on the consumer, many of which, of course, are becoming more choiceful about their spending. Home Depot is out with earnings on Tuesday. Shares also under some pressure today after a downgrade from Stifel. The analysts turning more cautious ahead of the company's report card, moving from a buy to a hold with a price target of $370 down from $440. They say the home improvement category is at best stagnant and potentially deteriorating, and that the estimates reflect a weaker second half of a delayed home improvement category recovery. Now, shares in Alibaba reversing course this afternoon, plunging after initially starting the day higher. The Financial Times now reporting that the US is accusing the company of providing technological support for Chinese military operations against American targets. The warning coming from an official memo provided to the FT, which included top secret intelligence on how Alibaba supplies the PLA with capabilities that allegedly threatens US security. K-Web also falling following the news. Alibaba reportedly rejects the claims. The company will report earnings on November the 25th. For now, I'll send things back to Marley and Jenny in the Chicago studio with some of today's top movers.
Thanks so much, Sam. Yes, like you said, Jenny Horn, co-host of Next Gen Investing, joining us here in our Chicago studio to talk about some of these stocks we're seeing on the move today. Let's talk about Micron Technology. They're having a really strong move to the upside. SanDisk, an even stronger move to the upside, but not quite as large a company there. On this news from Samsung.
Yes, and news that you wouldn't necessarily, I think, initially read as a huge positive, but is showing, at least right now, the overall demand we're still seeing overseas for these high bandwidth memory players. So we did see Samsung hike its prices on key memory chips by as much as 60% in the month of September, and squeezing buyers with these steep price increases as panic ordering is spreading across the industry. So this does come in response to the global crisis we're seeing, triggered by, of course, this unprecedented demand for AI data centers, which has created a global shortage. But the memory chip maker delayed its usual monthly pricing update for October before implementing then these steep hikes. So as a result of this, and right now we're primarily seeing these memory chips being seen in like servers, now facing higher costs, which could eventually push up prices for these various products, which is the last thing you want to hear when you have all these companies shelling out huge sums of cash. But so industry executives and analysts China's top foundry, which is Semiconductor Manufacturing International, reported the shortage is forcing customers to seek other companies for various components. And so while Samsung has trailed its rivals, it's seen only as a boom for names like SK Hynix, as well as Micron, of course. And so this is read as, hey, if they're going to raise their prices, if Micron can keep their prices stable, perhaps you'll see more and more interest in seeking Micron products. But again, the relationship with us versus what we see in Asia Pacific does still remain in a bit of an influx, although they have not been a target of these export controls. So we'll have to see how, of course, Samsung's pricing right now could actually be a boom for Micron.
Yes, certainly. The streets seem to think there's potential here. We're up almost 6% still on this news here. Want to move to this next one. Interesting moves as we've watched them today. Applied Materials. They were down following their earnings. They were down this morning when I was talking about them. Then on Trading 360, they reversed course, and now they're in positive territory following better than expected results.
I know, so this is amazing because I was discussing this name off the top of the day today on Morning Movers, and I was like, it didn't really make sense to me why we were seeing such pessimism. But now, speaking on things a bit different, because we're obviously higher on the session, I think that illustrates this was a pretty strong report. I mean, better than expected earnings. Shares, again, initially traded lower before bouncing back. We saw earnings per share that came in ahead of estimates. revenue also topped, and they did say that they're now forecasting a range of their revenue for the current quarter, which at the midpoint would imply roughly $6.8 billion, which was, again, ahead of estimates. So guidance was, stronger than expected. And they did mention that they are continuing to be at this leading edge front of technology with DRAM as well as advanced packaging, really continuing to grow over the coming years. So the company's key customers have included, like Intel, Taiwan Semiconductor, and last month we do know that they did say that they had to trim their workforce because they need to operate more efficiently. And so I like to think about like the ways in which these companies basically support one another. And so if you were looking at like the supply chain, you need the Micron memory chips to then be supplied, of course, to a name like Applied Materials, which then is very much focused on the intricacy of these chips. And then, of course, NVIDIA would be at like the end of the supply chain with everything coming together in their GPUs. So they're somewhat of a middleman. They're not so much in terms of like the memory chip makers, but they're somewhere in between that and, of course, like the GPUs.
Yeah, they're the equipment supplier in the center, but you can see, as we see the chart here, you can see the considerable move we saw to the downside and the move up. And
yeah, you talk fast.
360 around them today, and why that was happening was
okay, we're about to hit the 200, Randy.
Behavior. It was just the timing of their report and what was happening in the broader market. It was not that there's not optimism to be seen in this report. Also, speaking of optimism, NVIDIA turning it around. They're had a recent pullback in weeks, a pretty considerable one in advance of their earnings, but some price target hikes today and a strong move to the upside.
Yeah, really interesting to me is that now with this move, firmly at least higher as it stands. I know there's still a lot of time left in the session. Now putting NVIDIA on track for actually a winning week. One of 3 Mac 7 companies that's able to do so. So them alongside Apple, Microsoft are at least as it stands seeing winning weeks right now. But all of this volatility has put even, I'd say, an extra focus on this earnings report Wednesday, of course, after the close. Analysts are still pretty generally positive. KeyBank, they expect some strong third quarter results. They also expect the guide for January to be higher. They said that really this is because of NVIDIA's increasing their shipments of Blackwell Ultra hardware, which could drive further upside to right now already pretty strong stock, of course, on the year. But they have, of course, declined to comment on whether they plan to resume those China shipments. I think that would be so critical on this earnings report because I think that the ultra bulls in this name right now are saying, hey, there's all this unrealized potential from a nation right now where there was no guidance for any revenue. So that would be, a huge win. But we also do see, other analysts right now, like Morgan
the 6770s,
somewhat of a breakout quarter. And the debate does continue about the range of exports, again, what that actually looks like as far as like monetization. But NVIDIA's already been doing that. They are already monetizing their very, very customized, very advanced products, of course, being it does then to go to show that after the move earnings we've already gotten from the Mac 7, it was a very difficult environment to report in. I have to imagine the same will be the case for NVIDIA, which is the most scrutinized name. Trades with the highest correlation to the overall market. It's the reason that we tend to focus on these events as critically as we do.
Certainly. just their sheer size alone is enough to move market in whatever direction the market moves following the report. China will absolutely be in focus. And if they say anything about it, factoring sales in. But as for this week, they'll have to give up more than 1% to be down
within a minute
in the next 50 minutes or so. This last story, Apple, we've got the China iPhone sales now. We've been hearing about demand and suspecting numbers and pull forward numbers, and now we finally have
that was crazy.
They are. So it's amazing to me what is like the biggest source of weakness for the rest of the semiconductor trade is actually a point of strength for Apple. It's continuing to really separate itself from a lot of the trends in tech, but benefiting from the strong sales in China.
Shut up.
See perhaps an unlocked source of revenue as they're
I'm sitting here
spending on AI.
Well, I forgot what I was doing.
From the recent sell-off also in a lot of these AI-related names. Apple expecting right now.
I was messing around with my Facebook,
this week.
And I looked over and I said,
sales in China are performing well. iPhone sales in the country were up 22%
3 black crows
first month after the latest
to
launch
the
of
200
the 17 model, of course, compared
with
to
a long leg doji
being the 16 a year earlier.
That long leg doji. Now see,
research data, which was published earlier today. But Counterpoint said that we have
This
yet to
here
see any tapering past the shopping
is a
season
buy
in terms of the
indicator.
iPhone 17, and they are really attributing
That means
this to
that the
upgrade
buyers are
cycle
winning over the
coinciding with a new
sellers.
device that they believe
And it
brings
closed
great
up, so I
value.
jumped right into the trade.
We do know Apple took some
Before that
important
candle was
steps to
formed,
really
more or
clear the
less.
Chinese market. It has given
And boom,
very much
when it jumped up
transparent
and had that big
commentary
spike,
on that regarding the fact
in and
that
out.
around, we saw it cut its app store fees actually from 30% to 15% in the
Especially
nation.
during power hour.
Further trying to make
At this
themselves
time of
a
the
real
day,
player
I
in the
mean,
nation, but
this is
they're
too
going
early to be
against,
getting in a
the
power hour
biggest
trade
names
anyway.
overseas in tech, like Samsung, for example. And
But when it hit
other
the
very
200,
big
it was
Chinese
just, now you're
smartphone
getting a
makers.
tweezer.
But all that to be said, they
I didn't
have
look
said
at
that
to
they
see what
continue
this
to see
was.
this nice demand in the region. So whatever they're
Back
doing
to
with the iPhone
220.
17 is working. We talked about the lines outside of the Apple stores. I mean, it's really
But I just
positive
took
to
a
see
trade.
this translate outside of
So
our
this is
own
how I look
oil
at it.
ecosystem in the United States, overseas. 'cause
I want
that's
to take a
really,
break. I
really
just don't want to
where
jump right back into another
their
one.
growth is expected to come in the coming years.
And certainly, you know, the
Because
numbers
I
are
waited,
staggering.
what,
80%
a good
of
half
the units
hour
sold to consumers were
before I
in
got
the
back
iPhone
into a trade, or
17
longer than
series.
that.
All the while, their market remains weak, and their
How
third
long
quarter
was it?
sales for the
Been a
entire
while.
smartphone market were down 3% in China. So, you know, Apple really trying to get a stronghold on their market share there with this new offering. Jenny Horn, thanks for being with us to break down those top stories for us. Co-host of Next Gen Investing here on Schwab Network. And I do want to send it back to New York to Sam to find
Been a
out what we
good
have coming
5,
up
10,
next in the
15,
show.
20, 25,
Well,
30,
Molly, we'll
35,
look at
40,
what's next
50
for the
minutes.
economy after the
Almost an
government
hour.
reopened. The outlook for stocks in 2026, and if tech is in a bubble or not. Market on close. We'll be right back.
We could come down and hit the 200. Now you got resistance. You got a triple top breakout right here. That's called a triple top breakout, so that's where support's going to be. You want to put your support line. That's called a pivot point. Pivot
Whether you're an
point.
experienced investor or just getting started, Charles Schwab.
And it lands right on that 200 EMA.
The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its
Prepare ye in the name of the
Tune in
Lord.
live
Now I'm
or
going to
watch
jump
on
up.
demand. Head over to
I'm going to grab one at
schwab.com/coaching and start learning
67.60.
today.
Welcome to Schwab Network, where real-time market coverage meets
$4.20.
bell to the closing bell. We've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
We're at 470 right
The
now.
most important thing is that
490.
you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to
I'm going to get closer to the money
Actionable data.
as we get closer to the
Trusted financial
narrow
journalists,
shit.
Streaming live and on demand.
Schwab
I should've got
Network,
out.
Streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter.
I might want to go ahead and stop on out of this one if this thing will reverse real fast.
Back to Market on Close, I'm Sam Bardas on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's just check in with the markets with about 45 minutes to go in the session to cap off the week, and we have seen the stocks here actually staging a turnaround in the session this morning, actually starting the day lower, but making a comeback. The S&P 500 up
Now, what's going on here?
at 67.54. The Nasdaq also helped out by a nice turnaround as far as tech is concerned after of
Looks
course,
like,
we've seen that sell-off very much across the sector. It looks like the Mag 7 is obviously
Down
helping out
$40.
today as well. The Dow Jones continues
continues to
$40
be
is,
under pressure, but
decent.
we've got the Russell 2000 also participating in somewhat of a little bit of a rally this morning that we saw from this morning, I should say, up around 0.5%. Let's check in on the futures products because we've got the US dollar slightly higher there, but
Now we got a
still holding
tweezer
steady at
bottom.
99. Crude oil has been a big focus given some
So
of the
far I haven't
political
broken below that
cross currents that we're
200
dealing with Russia, Ukraine, also
with
over in
a
Iran.
body
Today,
candle
that's
yet.
$5 a barrel.
I'd
So
definitely sell
some
it.
of those supply concerns, of course, coming back into the minds of traders today. Bitcoin is down, of course. So we have seen that very much under pressure as far as that key 100,000 level. It's been sub 95 today, although we have picked up from the session's lows. The 10-year yield picking up as well. We're at 415. In fact, the 10-year yield, the chart on that has been pretty much moving in tandem with equities. So that tells you something. Here's a look at the sectors. Looks like we're
If I get a
seeing
candle like that
do
below
the heavy lifting today, 0.9%
this
higher,
200,
but the rest are actually lower today.
I'll get
So
out. Now you got a triple bottom tweezer.
those consumer discretionary, staples and financials all lower. So very much it seems like big cap tech is doing the heavy lifting here, along with utilities, which has been very much linked to the whole AI trade. Real estate is doing well, so are industrials, and energy marching higher, very much off the back of these higher crude prices as well.
And it's Friday too, so I'm taking some risk. Now I've got my candle starting below that 200, so I got to make a decision.
Higher on that name. Nvidia is flying high today, recovering some of the losses we've seen in recent sessions. We've got some price target boosts ahead of course its earnings next week. Meta is just fractionally higher. Microsoft is up by 1.4% and the rest are lower. So we're seeing a bit of a mixed picture, but certainly things looking a little bit more up than they have in recent sessions. So let's welcome in
this
our
ain't
guest,
good.
and that is Eric Lassell, who's the Chief Economist over at RBC Global Asset Management. Thanks so much for joining me, Eric, and happy Friday to you. What's your read on where we're at right now, post the government reopening and given all these tech AI valuation concerns?
Well, gosh, from an economic standpoint, we economists have been operating, I guess, wearing sunglasses at night for the last few months, not having a great sense for what's been going on. And there will be some extra clarity that emerges over the next week. In fact, we now know that the payrolls for September, at least, will come out late next week. So we'll get a better sense. But our best
So it's not really the best time to be scalping, in my opinion.
This has been a U.S. economy that
has first half hour of the power hour.
Modestly. And so not a collapse by any means, setting aside the artificial temporary effect of the shutdown itself, but one that is in slight decline, and one in turn that I would say still leaves rate cuts on the table for the Fed in December.
I'm down $60
with the precision that all once thought as of just a few weeks ago.
No, I'm down more than that.
The markets have sort of changed their tune this week as
Yeah,
far
I'm down
as some of that
170.
pricing in with regards to that December rate cut. I mean, the odds are looking at below 50% chance now. I mean, so it's not even a coin flip at this stage. And I mean, you've had some voices coming out of the Fed even today with Kashkari talking about the fact that, you know, maybe the economy is actually resilient. And also, of course, Schmidt, who was the lone dissenter there, and talking about how we don't really know what's going to happen next. So what do you make of some of that commentary, just because of the fact that we've heard more people giving a little bit more credence to the inflation side of the mandate?
Yeah, we can drop
really been
more.
The emphasis.
I think that's quite fair.
We drop to head and shoulders.
Look back to
a little bit higher.
As an example, that there was
right
has
been
been significant dissent on the Fed. This was always set to be a bit of a battle royale as to just how much cutting would be delivered in 2025 over this fall. And if anything, we've even had a little more, I think, than some of those dot plot voices might have initially thought likely. It's fair to say the inflation and the economic numbers are pointing somewhat in opposite directions. I would still say the inflation figures aren't coming in quite as hot as I had feared, and you know, as much as tariffs are inflationary, we're seeing some absorption at the corporate level, at the foreign
Does anybody know
manufacturer
Erica
level as
Kirk?
well. And to me, the thing I keep coming back to, and I suppose why I'm still maybe more sympathetic to a
I
December
want a hug.
than not, is just it's still a fairly high Fed funds rate. If you believe 3% is a neutral rate, this
I think
is
she's
still
probably one of the best
restrictive
huggers
setting.
out there.
The inflation hit from tariffs are, in theory, temporary, and so it probably is appropriate to
I'd
be
have
working
to say.
closer to home over time. And again, there's no right answer to whether December or January.
Kind of reminds me of the girl, some of my kissing cousins.
But I think they might get
when I
there. And
hugged
again, it's going
them.
to depend a lot on this data that comes out, and we're getting 2 or 3 months worth of data all in one fell swoop. So there's going to be a lot more information fairly shortly. And again, I think we will see.
I'm going to wait for this here support and add on
with the shutdown, and so that's something that could, I suppose, spook voters a little bit and prompt them to be more on the dovish than the hawkish side as that comes out, even though some of the shutdown damage is temporary. But I think more broadly we may discover that the economy was slowing a bit even without that shutdown.
What do you make of all this talk of this sort of characterization of a K-shaped economy and stock market?
Yeah, well, certainly there is some element of that. It's obviously an economy in which high-income consumers have been doing fairly well, and just about everyone else has been doing much less well.
Her mother does.
So I think that does very much exist. It's fairly narrow set of shoulders.
Okay, this is it.
On in terms of driving consumer spending.
This is what we want to hold right here.
Say that high-income consumer is though doing fairly well. They're much less.
Let me see if I can find that support level on that blowhorn, because that'll be a double confirmation.
Benefited from the tax cuts. They haven't been hurt as much by the tariffs as well. And so I think we can see that consumer keep pushing forward, but a large fraction of Americans aren't feeling great right now, and there are numbers that certainly point to a bit of suffering on that side. And of course, as you mentioned in markets, it's been very similar. It's a highly concentrated market, and today I guess is
we're right here
with those big tech companies rallying, I guess recovering, you could say, today, but having been the key drivers over the last few years. And it's certainly right to ask questions, I think, about that, and to
I'd give Eric
something has been overdone there.
$10,000 if she'd hug me.
We do think this AI push is for real in the sense of unleashing major productivity gains over a period of decades, and so I think there's something legitimate to that.
We went below the pattern.
The capex is too high right now, or whether it can continue to grow or not, but I'm inclined to think it probably can. This doesn't look too much like the late 1990s, and you're seeing these big companies that are actually fairly diversified with profits, with lower valuations in the late 90s, and they're dedicating in general less than half their free cash flow to this capex. And so whether it continues to grow or not, I don't think it spells doom if there has been some over investment.
I don't think I've ever seen a girl hug that well.
You think about some of the bubble.
Some of them aren't very good at it,
we'll
but
see
God.
where it goes, and maybe markets feeling better today. But do recall when the bubble concerns were growing in the 90s, and again, it is an imperfect parallel, but when they were, we had Greenspan talking about irrational exuberance.
Lord, I'm sorry about that.
Still 3 or 4 years of the market
I said
rising
God.
before that actually came to a head. And so I'm inclined to give the benefit of the doubt to the big tech players for the moment.
What about energy costs with all this data center build out? I mean, there seems to be a view out there that the retailers are going to have a hard time dealing with the rise of prices if we continue to.
Yeah, I'd say she's probably one of the best huggers in the world.
What you're saying, because with all this capex, the market does want to see ROI, and with ROI, you're going to obviously see that innovation. You're going to see that efficiency and that productivity, which could perhaps feed into some of those energy prices. I mean, that's the view out there. What's your take?
Yeah, that's right. And so
and the 9, so I think we get back to the 9. I don't know if I should just sell it and take the big loss. I got one contract at 420. So it wasn't a very smart move. But we're kind of hovering at this head and shoulders, so I'm going to see if we get a bounce back up. If not, I'll just take it because I had a good day today. We've got 35 minutes left. It'd still be a long wait, another 20 minutes. This is called a head and shoulders, and this was that megaphone line, so we're way below support, and we're way under the 9. The only thing keeping me in this trade right now is this. If I can get at least $1 out of this, it'll help. That's bullish. That's kind of bullish. That's bullish here. Tweezer bottom. That's bullish because we're above that body. That's bullish. So that all 4 of those candles are bullish. With the help of that tweezer bottom, the spinning top. But See, I should have grabbed at least 5 right there at 150. I'd be up $200 right now. I'd be even. Almost. Yeah, that would have been a good smart move right there. That'd give me 195. I could have got out of that. I still can. Okay, here we go. Right now. What to do? 130. 25. There we go, double bottom. Now this, we got to hold this. So 125. Damn it. I need a good bounce. I got an average of 175 rounded up. Let's go. Now I can get out of it right now and be... Damn it. Doing Come on. I was just joking when I said I wanted to hug Erica Kirk, Jesus. I just need some loving right now, that's all. And I figured she could really cheer me up. Please forgive me. It would be all platonic. I guarantee it. I said it would be platonic. Ooh. Oh, Lord. That's not cool. Oh. That's not nice at all. I'd like to see that close down here instead of right there. Well, it closed right there. Still got a chance. And get another 5 or 6 at a buck. I missed that. If I got another 6. That would give me 137. There you go, acting like Kamala again, Magnificent. You've had 2 relapses. You've been listening to her too much. Don't you think? You watch and see here. Yes, I'm even almost. Oh. Come on, baby. I'm even. Don't tell me I ain't put my thinking cap on. How dare you? Right to my resistance line. I didn't sell it. I'm squeezing now between the 9 and the 21. All I asked for was just a little hug, Jesus. There it is. Come on. Go! 160! Thank you, Lord. You know I was just joking. What do you think about that, Magnificent? Woo! Come on. I got a few left. That's back to that megaphone resistance line. So we're between the 9 and the 21 here. There's 140. Now I can get out of here and be green right now. I'm green. Let's see if we get a big breakout. Randy says, I don't know how he does it. How in the hell does he do it? $160. Yeah, I just got a couple more left. There it is. Looks like it wants to go. I love that reversal right there. It was down here and all of a sudden it went back up here to the top. See, it wants to break that's that megaphone resistance line. That's a hard one to break right now. What was support, resistance became support, and then what was resistance is again resistance. Okay. It could come back down and do a triple bottom. That's what I'm fearing. I say, how in the hell does he do it? I think I'm done with. There's the triple bottom. Actually a quad counting that wick. Now I might just have two wicks, so that's more bullish. Come on. There's my third body, I think. There's my third body. So far it's worked out pretty good. Not real good, I mean. I'm up about $100. Okay. Might have to sell it. $19 more minutes left. I'm up $30, 35, 30. If I sell it now, I'll be up $30. Oh, God. Now if I bought 18 at 35 bucks or 30, that would be $630. I don't know. Not feeling it. By 30 right now. Nope, I'll wait. I'll just take the loss. I'm up $30. $20, $30. $15 more minutes left. So we're in crunch time. 5 more minutes really before I know what to do. We're too far out of the money. I know what to do, sell them. I think that'd be the best thing to do. If I can get 30 out of it. I'm too far out of the money right now. Oh, little hope. 45. say goodbye. I don't think I have a chance. Just too far out of the money. I'm out. I'm out. Oh well. Okay. Not a bad deal. Bad day's a whole lot worse. $11 to go. Now we want some funk. Do. I'm done trading. Then we'll go out and get me some WD-40 this weekend. And see if that can fix my chair. If not, the spring could be out. Huh, looks like Schwab TV's frozen. It's alright, I'm done. I wanted to listen to what they had to say at the end. Damn it. It is. We got 1 more minute left. There it is. Ding, 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 ding. Okay, Tesla has to hold 400. If not, we could be a strong buy at 364.43 to go long. That's the pivot point off the 200. So I kind of like that. I'm going to wait. I'm going to give it some time. It's either got to break the 63 right around 412 before I run it up. Someone's asking me about Tesla right now. I love Tesla, but I don't, and the market's in a correction right now. Fat cats think we're way overbought in the Magnificent Seven. So the only reason I want to be patient, and if this thing hits 364.43, I'm long. I'm very long in this trade. And create an alert because I want to get in this trade. I'll buy leaps. Some guy comes out and says today that years from now they'll just be buying the robocars. The two robo-taxi cars will be the takeover. They won't be selling much Teslas. Bullshit. The EV car, I want to make this, and I've said it forever, that the EV car is for the elite. If you got a house and you got a garage, it's for the elite. It's not for long distance driving. It's just a back and forth, get back and forth to work car. That's all they are, all the EVs. Probably another 10 years, I might say something different. It's getting too expensive for, I don't know about the middle class. As long as you can afford car insurance has gone up quite a bit during the Biden years. So it costs a lot more to drive a car than it ever has. When I retire, I don't think I'm going to have a car because I'm going to be living on some private island where I can just get on a little scooter, little three-wheeler, and ride back and forth. So I don't even know if I want to be driving. There's too many idiots out there driving right now. So eventually and I'm getting older too. I don't want to. So I might get me some kind of three-wheel scooter. But the EV car it's for people that, does anybody have an EV car? I only know one person that has one. Two, maybe. So, well, I'm going to get out of here. I've had a real fun week. I mean, I love volatility. I'm trained to catch knives. I've been one trade at a time for almost 5 years now. One trade at a time. I'm not much into swinging stocks when I don't have the mindset to sit there and watch 5 or 6 stocks at one time. I can watch one, and I enjoy trading the SPX or waiting for some of these stocks to get at real strong support levels, and then I'm going to be jumping in them and swinging them like I did when we got down below. Now, all we've heard is Terrafist, Terrafat, overbought. The guy got in here today again and was talking about the top 7 stocks, how much, the market is invested in them and not any others. They keep saying they want it to broaden out. I just think the dips are a buy. And we've been told 10%. So I don't know if this selling's over with or not. But we've had a real volatile week. And I'm going to pull it up. I'm going to show you. I thought we would consolidate. So we'll start off with the SPX on the 5-day. Actually, let me clean this. I'll go the 5-day. So we did kind of consolidate. We broke out and then we pulled back, and we didn't go to the week low. We broke out, and this morning almost went to the week low and bounced off that 5-day and hit the 200 on the 5 minute. So that was definitely resistance on the 5 minute. So we're in between. We're at the pivot point of the week. Here's your gap right here. So if I drew a gap, look at that. See where that gap is? Look where we pulled back into close yesterday. Look where we broke out today. We almost pulled back and hit it today. And then we closed right there at the bottom of that gap. So we held the bottom of the gap on the 5-day time frame, 5 minute. Which is good. I mean, as long as we held that, and then we got a triple bottom. So we could come down next week and hit the triple bottom right around 660, somewhere around in here. I'm going to do a video this weekend on the indices, because I'm kind of liking where we closed at today. We closed at the bottom of the gap. I mean, that's huge. And we didn't break out of the gap today. And we held the 200. I mean, that's a pretty good looking chart right there. So let this be a lesson next week. Just don't get glued to one time frame. I want you to look at the 5-day and the 20-day. And then look at the yearly, daily, and the weekly. And I'm going to do a video this weekend on them 4 time frames. The 5 minute. And then if I see a trade, I might look at the 1 minute. The 5, the hour, the daily, and the 200. I mean the weekly. But we definitely closed at the bottom of the gap. I mean, right into the low. I mean, that's... I wish I'd have looked at that a little bit sooner. I really do. If I'd saw that 200, I would have might have run this up all the way up to the 200 this morning. If we broke that 63 when we did. and then we came back and touched that gap, I would have stayed in that trade. And then I would have scalped it again. There's that megaphone pattern. I did scalp it from there. But then I got into this stupid trade here and messed up. So I'm going to get out of here and just kind of relax, meditate, and watch a few videos. And please subscribe to my YouTube channel and watch this weekend's video. I think it'll be educational. I'll be talking about the gap again. I've done 2 videos on the gap this week. So this will be another one. I'm definitely going to do this one here. Because if I'd have caught this earlier, I think I would have took that trade right there. I know I would have. I would have took that in a heartbeat. On the 5-minute, because that close right there, there's no doubt in my mind I would have took that trade. Breakout, pull back, I mean, hell yeah, I would have took it. I mean, that's a good setup. That's a real good setup. Everything, once it breaks out of resistance, always remember they pull back and retest. And we retested on that bottom of that gap. There have been no ifs, ands, or buts. I would have took it. Okay, well, if I didn't. I'm going to get out of here. And I wish everybody a great day. We had a great week this week. Study that. Look at that 5-day, 5-minute. And we'll catch you later. YouTube, make sure you subscribe. Oh, I had that big old face on there. I didn't really get that down, did I? Probably got tired of looking at that big face. Woo! Let's leave with a song.
Risk and reward in the world so mean, but Jim just laughs, tips his old hat. He's got the moves, imagine that. Jim likes titties and telemarketers too, teaching fools like me and you. A work of art, his strategy's tight. Washboardjim in the trade and fight.
Alrighty. Jamaica 2015. I'll catch you later.